Chat. We're back, chat. We're back. You got Airbnb earnings today. Well, you got quite a bit of earnings, but we're going to cover Airbnb because obviously that's the most interesting business being covered. And I still haven't seen anything on the lightning packs for Gamestop. There's supposed to be a drop today for power packs, something new, but I haven't seen it yet. So I don't know. I don't know what's going on. Holy shit. Fastly's up 84%. Holy guacamole. Holy. Whoo. Wow. That's a breakout if I've ever seen one. Holy shit. Look at that retrace too. Look at breakout back here in November. You got the retrace. Oh man, that was a beautiful trade. Obviously, I don't pay attention to Fastly, but crazy trade. Beautiful breakout retrace trade. You gotta love it. What's up, Muma? Couldn't see anything about the lightning packs. That's why I asked about it yesterday. Was it from GameStop or was it some influencer? No, I think it was a commercial that they created. Maybe they'll release it here in like 10-12 minutes when it hits noon. Not sure. I was expecting it to be up in the morning, but maybe it's gonna be like an afternoon thing. Oh. Who knows? I did find a couple articles to read. I just don't remember if we read the Seeking Alpha one or not. Like, I feel like we did. And then that's when, like, my videos first started glitching out. Did we ever read this? GameStop may not be the next Berkshire, but exciting times are ahead. I don't remember if we read that or not. I don't think we did. I don't remember. And there was something else. There was just like something. I think I'm gonna try to report on GameStop more, I guess. At least until the videos stop doing well, because even that last video, you know, whether it's because of the thumbnail and the title, I don't know, but that last video did okay. Yeah, this GameStop hit with backlash after joke about trading in a woman for PlayStation 5. This has gotta be a funny little stream clip. So we got that. Is there anything else? Everything else is kind of old. I wish I would have kept the first videos I posted this year, like the GameStop awards and stuff. But it's okay. Live and learn, I guess, right? At least we got the streams. Jimmy does do a massive turnaround. These articles will be gold mines as far as how media portrays the narrative. Yeah, but the media is like kind of changing now. It's not as bearish as it used to be. It would have been cool if I started doing this a while ago, like. But yeah, I don't know. I can't remember if we read this or not. Try to skim through it real quick. No, I don't think we read this. So 2 little stream clips for today. But let's see. See what's on the news front before we do that. You gotta bounce off the buy line. The buy line was like 23.57 or something like that. Got a pretty decent bounce off of it. But overall, a lot of selling pressure randomly. Maybe it's because the whole market's down. I mean, the Russell's down 2%. That's quite a bit. So maybe the market's dragging down on GameStop a little bit. We already looked at that. You do got Coinbase, public storage. ANET would have been a good one, but it's either Airbnb or Coinbase, or Expedia is a decent one. Twilio is really good too, I think. I would love to make a GME documentary one day, splicing clips of the transition over the years. That'd be sick. That'd be sick. I've been thinking about making a documentary as well. It would just take a long time to edit. It would be really cool though. Like go through the whole evolution, start from Babbage's to now. That'd be tight. I think it'd be a good idea to start working on it, and then if GameStop actually ends up blowing up, you know, that's when you would release the video, because that would be, you know, that'd be the best. Like if you release the video right now, it wouldn't be that great. But if you started creating the video and then released it at the appropriate time when there's a lot of hype or something, then yeah, that'd be sick. But it would have to be good. It'd have to be good. I don't know if I'll ever do it because I'm lazy. But it would be a fun project, that's for sure. Well, utilities leading the way up today, and consumer staples, tech leading the way down, energy, financials. Yeah, that pretty much everything's selling off today except utilities and real estate. Real estate, isn't that funny? Isn't that funny? Real estate, huh? Real estate's up today. Huh. Funny. That's funny. Let's see. Any existing home sales? Oh wow. Existing home sales are down a lot. Like that should be a positive thing actually if you own real estate. That's actually really positive, I think. It's probably not positive if you don't own real estate. January. Yeah, I don't know. I don't know. Oh yeah, I drove by a bank the other day, and they're offering like less than 5% interest on a refinance. I thought that was crazy. I thought that was really interesting as well. It makes sense why refis are up so much, even though, you know, rates are sitting at 6%, banks are offering lower because they're desperate. They're kind of desperate, I'm sure. Let's see. Yeah, there's not much economic data to go through. Might be a slow day for news. What's up, Elvis? You're lucky you got saved by that coin flip, bro. You're lucky you got saved by that coin flip. If it wasn't that for that coin flip, I would have banned you, bro. I would have banned you straight up. So, I don't know. All I can say is try to bring something of value to the stream, because I don't give a fuck about your GameStop swing trade, bro. I literally don't. I don't think anyone does. Let's see. Group 1 trading added 1.3 million calls, 43% increase on their position. They also added 632,000 puts. That's a 111% increase on their put position. California Public Employees Retirement added 148,000. It's a 48% increase. Merrick's Group added 243,000. That's a 31% increase. Dimension Fund added 30,000. Nothing crazy there though. Bank of Montreal though, they sold 1.3 million puts. That's 91% of their position. But they also sold 800,000 shares, which is 58% of their share position. A lot of institutions sold their shares. Like Group 1 Trading sold their shares completely, sold 158,000 shares. Oh, and Bank of Montreal also closed out their call position. That's interesting. So they still have like 10% of their puts and maybe like 40% of their shares. But they sold all their calls, huh? That's kind of weird. Anything else? Nothing else really notable. Nothing else really notable. What are my thoughts on the Bitcoin sell-off? I mean, you've been here for a while. I thought Bitcoin was trash at all-time highs. I just think Bitcoin's has no value, and people are slowly starting to realize that is what it is. You know, will it go back up? Maybe. It could, you know. I would never say it can't go back up. I would never say you'll never see like another altcoin move, but in my opinion, I feel like people already made their money on crypto and they're just like betting on something that'll most likely never happen again because crypto has no value, especially altcoins. Altcoins literally have no value. Bitcoin, the only reason Bitcoin has value is because government's buying it. If it wasn't for that, like Bitcoin would literally have no value, in my opinion. You know, I don't see value in Bitcoin. So, but yeah, overall, I just think people are starting to realize that it's a trash investment. But who knows? Who knows? You know, maybe a couple of years from now it hits all-time highs again. I don't know. I would never buy it. I would never buy it. Oh yeah, Muma, I was looking during the earnings call for GMEU short interest, and I saw that potentially GMEU is like 10% short, over 10%. So if you're counting that, you're almost like 30% short interest on the GameStop. Well, I don't know if you'd really count GMEU as a GameStop instrument, but you're like over 20% short on GameStop instruments and then over 10% on that. It's kind of interesting. But yeah. I don't know. I just don't think crypto has value. That's all. I've never thought it had value. Even when everyone was excited about it. I never thought it was a good investment. And you know, time tells all. People like to talk a lot, but time tells all. And also, you know, there was a certain point when a lot of people were talking about crypto. Even a lot of people like I knew personally, or I'd be at the gym and I'd hear people talk about crypto. When you're hearing people talk about crypto in the real world, like, you know it's over. You know it's over, bro. When you hear people talking about it in the real world, it's done. It's done. Never in my life have I heard anyone talk about GameStop in the real world. In fact, whenever I talk about GameStop in the real world, people think I'm a fucking psycho. That's how I know it's going to work out. Because everyone thinks I'm a psycho. Everyone thinks it's going to go below $20. And maybe it does, you know. Maybe it does go below $20. But it does. Yeah, I think people don't understand investing. And they just follow the herd. And following the herd generally doesn't work. But, yeah. Final thing I'll say about crypto is, you know, we talked about it back here when it first hit 75,000. Back at the beginning of the month. That was a bearish trend on Bitcoin. That was a bearish trend that got created. You know, it was bullish. Overall, you know, Bitcoin is still bullish, like if you're looking at the overall trend. But if you're looking at the past year, you know, at the beginning of the month, Bitcoin made a bearish trend for the year. So the shorter to medium term trend on Bitcoin is bearish now. And I don't know how relevant the overall trend is. I mean, we'll see. We'll see, but yeah, I just think people are it's kind of like AMC, you know? People are betting that whatever happened before is going to happen again. And I don't think I don't think it's going to happen again. Doesn't mean it's not going to, you know. I've been wrong many times, but I generally feel like I have a good handle on market mechanics, and yeah. Once people stop buying the dip on Bitcoin and everyone's scared to buy it, maybe then you'll see a turnaround, because that's how it was back here, back 2021, 2022. People, you know, it sold off from 65,000 all-time highs, went to like 40,000. People were still buying the dip because they thought it was going to skyrocket, and then it went to 20,000, 15,000. And I never saw anyone talk about crypto down here. There was nobody talking about crypto. And then, you know, you saw what happened. So it's going to be a while before you see a bottom on crypto in general, in my opinion. I don't think you'll see it for a while. People are, you know, too hyped on this dip. And you're also kind of seeing the stock market top out a little bit, in a way. Obviously, you hit new highs on the Dow the other day, but you are seeing the stock market top out as well, potentially. So unless you get a really bullish day coming up soon, you know, there could be a solid couple months of selling in both crypto and stocks. I mean, we'll see. Obviously, I'm not bearish on stocks. It's kind of hard to be bearish on stocks when they're making new all-time highs, but you never know. You know, with crypto being down so much, it could start to drag on the market. Or, you know, people could also be rotating out of crypto into the market. There's a lot of factors. Ryan Cohen laid out a trap for the shorts with omni-channel financial instruments to trap them with an M&A. I get laughed at. Do you believe there's a tie between Bitcoin and GME? Nah, definitely not. I mean, I bet their market perception, just because they have the Bitcoin on the balance sheet, you know, potentially traders could see crypto going down, and maybe that's why you're seeing so much downside on GameStop lately. Because some people take that seriously, but if you really think about it from a financial perspective, it's only like 4% of their overall assets. That's really nothing. Ruben! What's up, Ruben? How you doing, bro? How you doing, Ruben? Anthropic closes $30 billion funding round as cash keeps flowing into top AI startups. Electricity prices rise by double the inflation rate. Data center demand means no relief. FedEx says exceptional holiday season will drive expected third quarter earnings beat. Spirit Airlines sells more planes, calls back 500 flight attendants from furlough. Waymo begins deploying next-gen OJ robo-taxis to extend its lead in the U.S. American Airlines flight attendants picket as CEO tries to calm frustrated employees. Huh. Office real estate stocks tumble as AI disruption casualties in the stock market grow by the day. That could be positive for residential real estate, potentially, depending. I mean, I don't really know much about that, but could be positive for residential real estate. Let's see, anything else? Nothing there. Walmart rolls out fresh sushi bar in Florida. I don't think there's really much news today. A bikini cafe raided? What? What? Code of violations. Let's see. Abina said she discovered the cafe after searching for coffee shops in the area. Described walking into a business where employees were unclothed while she was fully dressed. Referenced the meaning behind the cafe's name. Shared her reaction. Authorities said the cafe violated public nudity and alcohol regulations, along with other Garden Grove municipal codes. Business was not permitted to sell alcohol. Sounds like a party. Sounds like a party. Man sues shop owner after losing $130K on lottery tickets. 410-pound manatee pulled from Florida storm drain. This store is giving away GTA 6 for free if you have a baby on release day. That's kind of funny. Crap news. Instagram boss argues people can't get addicted to social media in lawsuit. That's crazy. You can definitely get addicted to social media. White Castle's first fully automated vending machine. Damn. Right next to the Pokemon machine, bro. You can get some White Castle and Pokemon. And if the Pokemon's sold out, you can cry with some White Castle. That's sick. That's awesome. Anything else? Pretty dead day for news. Second StarCraft shooter reportedly being developed by Arc Raiders owner. StarCraft shooter. That'd be kind of interesting. Dawson Creek star James Vander Beek dead at 48. I don't really know who that is. Okay. News is clapped. Rich people are turning their homes into Hitman levels with armed guards. Walmart sushi, Florida sounds amazing. Gas station sushi. I've never had gas station sushi, but I've had a couple of the supermarkets out here have a sushi company that come and make fresh sushi every day. I forget what it's called. But I've had a store sushi, but not gas station sushi. That sounds gross. I don't know if I would trust gas station sushi. You go get some sushi from Maverick or some shit. Wait, you guys probably don't have Mavericks. Maverick's a Utah thing. Wild Pokemon rumor claims Fire Red and Leaf Green are coming to Switch. It's becoming impossible to buy a Steam Deck. Huh. Steam Decks are sold out. That's crazy. PC gamers are dumpster diving for RAM? What? That's insane. That's insane. $1,200 Ubisoft workers strike in response to layoffs. Apple Vision Pro finally gets a YouTube app. Can you imagine streaming on the Vision Pro? That'd be crazy. Oh yeah, the state of plays today, huh? When does that start? 5 p.m. Eastern time? Oh, it starts when the earnings call starts. That's whack. Oh. I'd still rather stream Airbnb earnings, but it starts with, that sucks. That sucks. Ah, that sucks. I wanted to watch that. I guess I'll just have to watch the rerun. Or I can just read about it, I guess. Don't really need to watch it. We'll see how the earnings call goes. Maybe we'll just ditch the earnings call for state of play. We'll see. WhatsApp's fully blocked in Russia. Apple just released iOS 26.3. Bro, oh, the new Apple update is garbage, bro. Like, actually garbage. I hate it. I hate the new Apple update. What is this? Someone's RTX 5090 blew up. There's a video of it? Is there a video? No video? Oh, I want to see the video though. Billy! It's on Billy! Bro! What? Oh, could you imagine spending like $1,500 on that thing and then it just cooks? Good old NVIDIA engineering. Good old NVIDIA engineering right there. Arc Raiders had nearly 1 million concurrent players in January. Around 6 million weekly active users. Wow. Fortnite adds more anti-cheat. Not much news. Kind of whack. At least we got some GameStop articles to read, I suppose. I finally figured out what's going on with my videos. I had to update my video editing software. For some reason, it kept muting the video when I'd upload it or export it. It's very weird, but I think I got it fixed now. So we can get back to making some stream clips. Alrighty. Warranty, I guess that's fair. I guess you probably probably most likely have a warranty. We got Quick Trips. My PC has gone up after I bought it. Might sell in YOLO into GME if we dip to 20. That'd be funny. I wonder how much my PC's worth being like older. I wonder how much it's worth. I've thought about selling my PC, but obviously, you know, I use it every single day, all the time. I'd kind of be lost without a PC. I've been using a PC since I was a kid. Like, I don't know if I could go to just like straight up phone. Obviously, if my PC stops working and it costs too much to bring it back to life, I probably will switch to the phone. But man, it'd be a weird life without a PC. 5090s, 2500, good lord. Should be streaming that all day. What is my thesis on GME? Seems like their collectible business may take off. That's a very broad question, bro. What is your thesis on GME? That's the most broad question ever. There's like 1,000 things. So maybe ask a more specific question. There's literally like 100 things that I could tell you, and I'm not going to sit and tell you. There's thousands of hours of content on my YouTube channel that you can just go through. Go read the last Ryan Cohen interview. That's probably the simplest way to figure it out. But I'm not going to sit and spend the next hour or two talking about my GameStop thesis. Sorry. Not going to happen. There's thousands of hours of content on this channel. You could go figure it out if you really care. My GME does collectibles. What's up, Grady? What's up, Grady? How you doing, bro? 5090 is like 3 to 5K, and in China might be more than that. Not sure. Just looked it up out of curiosity. I'd imagine in China it's cheaper because that's where it's manufactured. But I don't know. All right, let's hit these stream clips. I actually want to read this one first. GameStop may not be the next Berkshire, but exciting times are ahead. GameStop Corp is exploring a major acquisition to transform its business and deploy its $9 billion cash pile more effectively. GameStop's core video game business is in structural decline, with interest income now outpacing operating income from retail operations. Acquiring a profitable company, likely in retail or consumer sectors, could boost GME's yield from 4% to 10%. I need to, before I start reading this, actually, we need to increase the text size, because that looks better. And yeah, I just need to do that. Okay. Rebate. Okay. GameStop may not be the next Berkshire, but exciting times are ahead. GameStop is exploring a major acquisition to transform its business and deploy its $9 billion cash pile more effectively. GameStop's core video game business is in structural decline, with interest income now outpacing operating income from retail operations. Acquiring a profitable public company, likely in retail or consumer sectors, could boost GME's yield from 4% to 10% and offset core business deterioration. I am not bullish yet, but will closely monitor GameStop's acquisition strategy for signs of meaningful GME stock turnaround and balance sheet transformation. Not bullish? Why not? Why wouldn't you be bullish? Just because they're making a bunch of money on cash and not the business? Like, what? I don't really understand why that's an issue with people. Like, profit is profit, bro. You cannot deny anything about that. GameStop Corp investors will never forget the meme stock mania of 2021 that gave a new life to the company. It is hard to imagine that this happened more than 5 years ago. Making the most of the meme stock rally, GameStop raised billions of dollars in new capital to keep the company afloat at a time when its core video game business continued going south. That was part of it, but also the console release benefited GameStop a lot. So, sure, the meme stock rally was probably a big part of it, but you also have to give credit to the console release, you know, the PlayStation 5 and Xbox coming out. I forget which one it is. To add some context, soon after the original meme stock rally, GameStop raised $551 million with an equity offer in April 2021 and another $1.13 billion in June 2021. These were followed by 3 major secondary offerings between May 2024 and September 2024. Last year, GameStop raised close to $4 billion using 0% convertible notes as well. Hardly any of this newly raised capital was deployed to revive the core business. Well, it's because cash is super valuable right now and you're making a lot of money on cash, so you don't really have to deploy it. The company tried in vain to embrace the digital economy a couple times, a failed NFT marketplace that was shut down in 2024, and a crypto wallet that was abandoned in 2023. Then came the Bitcoin move in 2025 when the company allocated $500 million into Bitcoin. At the time, I thought of this as a strategic move that could potentially transform GameStop into a Bitcoin holding company. Following in the footsteps of strategy, that did not happen either. Well, good, because crypto's trash and so is strategy. I'm glad that didn't happen, because could you imagine if, I mean, I would have sold. I wouldn't be in this investment anymore if they would have turned into a treasury, Bitcoin treasury. I would have sold 100%. So I'm glad that, we got an actual educated CEO at the helm of our business here, or of our investment. Last week, in an interview with the Wall Street Journal, GameStop CEO Ryan Cohen revealed that the company is eyeing an acquisition of a publicly traded company as part of his plan to turn GameStop into a $100 billion company. The current market cap is around $11.5 billion. At this interesting juncture, I wanted to understand how GameStop could transform itself through an acquisition. I'm pretty sure he specifically said several $100 billion company, not just 100. Comparing GameStop to early Berkshire Hathaway does not make sense. GameStop wants to acquire a publicly traded business to put its cash pile to better use. This makes GME more like a leveraged buyout fund with access to $9 billion in cash. However, this does not make GameStop the next Berkshire Hathaway. Although some investors have already started making parallels, I believe these comparisons stem from CEO Ryan Cohen's remarks on his investment strategy. In an interview with the Wall Street Journal a few years ago, Ryan Cohen revealed that he prefers investing in deeply undervalued stocks, similar to Warren Buffett, and also to focus on mismanaged companies similar to the activist legend Carl Icahn. Although it might seem Ryan Cohen is trying to turn GameStop into a holding company with his acquisition strategy, his track record so far does not warrant a comparison to pre-Berkshire Buffett. Oh man, what? What? That's crazy. That's crazy. Before acquiring Berkshire Hathaway in 1965, which was a struggling textile manufacturer at the time, Warren Buffett ran the Buffett Partnership Limited, though which he invested in deeply undervalued companies. Between 1957 and 1968, this partnership returned 31.6% compounded annually. Damn, that's impressive. That's impressive, bro. In contrast, the Dow Jones only grew at a CAGR of 9.1% during the same period. Investment returns of Buffett Partnership Limited. This is, what he did every year. We don't really need to go through that. Warren Buffett had a very successful history of efficient capital allocation well before he started transforming Berkshire Hathaway into an investment conglomerate. Ryan Cohen, on the other hand, is an entrepreneur or an operator of a business who has shown success in the retail field. He co-founded Chewy before pivoting to external investments. Given Ryan Cohen's hands-on approach, which contrasts the Buffett's hand-off approach, I do not believe it makes sense to claim that GameStop is on the verge of becoming another Berkshire Hathaway just because the company is eyeing an acquisition. That's actually a really good point. That is a really good point. But I mean, that makes me more bullish on Ryan Cohen because he is hands-on. Ryan Cohen's a real businessman. Warren Buffett's just a geezer who made some investments that happened to work out. I don't think Buffett really did anything other than that. GameStop needs a reset. Acquiring a cash cow would be a big win. GameStop needs a reset. A quick look at the company's recent financial performance reveals that it is operating more like a bank than a retailer. In the first 9 months of 2025, GameStop reported operating income of $96.9 million. This is what the company brought in from its core business. Interest income, on the other hand, was almost double at $185.5 million for the same time period. This is what the company generated by simply holding its massive cash pile in interest-bearing accounts and other types of short-term investments. In fact, the company generated $227 million in interest income, which was reduced by $42.2 million non-cash interest charge related to warrant issuance. Oh, that's awesome. That's awesome. I love that. I love the sound of profit. The core business is declining. Net sales declined by around 4.6% in Q3 2025, from $9.36 billion in 2016. Revenue has declined to just $3.8 billion in the TTM period. The company can only go so far in cutting costs to limit operating losses. GameStop needs a new strategy that is focused on growth, not just stopping the bleeding. This is where an acquisition could prove to be handy. I really disagree with this, and he doesn't even mention that the only reason their revenue is going down and their sales are going down was because they're cutting stores. I think that's extremely obvious, but nobody wants to mention that for some reason. And I think Ryan Cohen knows what he's doing, so to say not just stop the bleeding, I don't think this guy really knows what he's talking about. Ryan Cohen's the fucking man, bro. You think you know better than Ryan Cohen? Okay. A value accretive acquisition will help GameStop in two ways. First, GameStop is earning a yield of around 4% on its cash pile today. It's actually 3.5%, so get your math correct, bud. Which could be replaced with a much healthier yield of around 10% if the company were to acquire a profitable retail business, such as an auto dealer. What? An auto dealer? He specifically says in the article, retail or consumer. Why an auto dealer? That's actually... The suggestions that they should... for businesses that they should acquire are terrible, bro. The suggestions people give are terrible. Ryan confirmed that GME will prioritize finding a target company in the consumer or retail industries. Wait, Target? Just kidding. Although the auto retail sector is currently valued at a forward PE of 22x, this is a distorted number as it includes a handful of auto parts companies trading at a very high valuation multiples. What? Why? Ugh. These analysts, like... I don't know if they really understand business, honestly. A lot of these analysts, I don't really think they understand business that well. This sector is home to auto dealerships as well, which are valued at a very cheap multiples except for Carvana, for instance. Penske Automotive is valued at a forward PE of 11.7x, while AutoNation is valued at a forward PE of 10.4x. Acquiring a profitable auto retailer at a PE of around 10 will boost the cash yield of GameStop's investments to around 10%. Yeah, the reason those automakers' PEs are so low is because they're trash businesses and they're declining, so why would you... Terrible suggestion. To quantify the impact, let's assume that GameStop will use $7 billion to acquire a company. At a 4% yield, this would result in lost interest income of around $280 million annually. However, by acquiring a company with an earnings yield of 10%, GameStop will report incremental operating income of $700 million, resulting in a net gain of $420 million just by acquiring a profitable company at a reasonable valuation. $420 million's nothing, bro. When Ryan Cohen is saying they're going to turn GameStop into a several $100 billion company, this is a terrible suggestion. $420 million is literally nothing. $700 million is literally nothing. It would take forever to become a several $100 billion company making that little tiny amount. Like, that's crazy, bro. That's crazy. What a terrible suggestion. Second, the acquisition of a profitable public company will help GameStop offset the negative impact from its deteriorating core business. The business isn't deteriorating, they're just cutting costs and closing stores so it looks like it's deteriorating. If you knew anything about business, you would know that. You would literally know that. But you don't know anything about business. You're just writing an article, making terrible suggestions for things they should acquire with no real reason of why. Besides a PE. What does a PE have to do with anything? What does that have to do with anything? The business... $420 million? Trash. In addition to boosting the top line, acquiring a retail business will transform GameStop's balance sheet to hold tangible assets. This will be a major transformation of its balance sheet. Such an acquisition should also lead to a valuation re-rating, as GameStop will no longer be a dying retailer, but a diversified holding company with a far lower going concern risk. GameStop's not a dying retailer, so whatever. Takeaway, GameStop is entering an exciting business phase where the company is likely to make tangible, quantifiable progress toward diversifying away from its dying video game business. This will be real progress compared to trying to find a way to profitability through cost cutting. Dude, this guy, I mean, there was a couple things he said that I kind of appreciated, like, you know, saying that Ryan Cohen's more hands-on than Warren Buffett. Warren Buffett's more hands-off. Like, that's a really good point. But basically everything else this guy is saying just shows me that he doesn't really understand business. Which I believe it is a way to which I believe it is way too early to turn bullish on GameStop. Really? I've been bullish for the past year and a half, so I don't know what you're talking about. I was bullish the day they made a profit. I've decided to monitor new developments closely to evaluate if a potential acquisition could turn things around dramatically for GameStop. In case the company announces a new deal, I will publish an analysis discussing how it could impact the company's liquidity profile and operating performance. Oh wow, that's what we need, bro. That's what we need. Delantha D. Silva is just another analysis article from you, because you definitely know what you're talking about, Mr. Too early to turn bullish on GameStop. What? What? Too early? Crazy. 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 These articles are trash. These articles are trash, bro. You think the store within store model is what Ryan Cohen is going to go with? Buy Best Buy and stuff it with other retailers like Micro Mall, GME, Best Buy, Toys R Us, etc. I don't think they're going to buy Best Buy. When you're talking really, really big, it's got to be something really, really big, not something similar to GameStop size. So I don't, but as far as do I think they're going to go with the store within a store model? I do. I do actually think that. I mean, Ruben's the one who brought it up, but it is a good speculation for sure. The store within a store model seems really smart because you can turn it into like an experience. GameStop world. I think that's what's coming. What will it be? I don't know, but I would like to see a Costco/Amazon competitor. I hate stores, but love Costco because it's a one-stop shop, really. I know I only have to go one time a month. We gotta make Corey Reed's GME article before bedtime ASMR edits. Dude, if you guys posted clips, that would be awesome. I wish, bro. I wish someone out there would post clips. I fucking wish, bro. What this motherfucker say? I said, Cagger. You damn Cagger. You goddamn Caggers. I'm waiting for the GME article that tells me something I don't already know. That was 2 weeks ago with the Ryan Cohen interview. You're not gonna get something like that for another like year or two. All hail Ryan Cohen. You gotta get writing and submitting articles. That'd be tight. That'd be tight. I don't know how you do it. I think you gotta get approved. Kind of wonder if a micro mall plus Uber for delivery could compete with Amazon. A micro mall? What do you mean by that? A micro mall. I think I like see the vision you're trying to put out. A micro mall, huh? That's actually kind of interesting. That'd be kind of interesting. That's why it's got to be Target, right? It's the only store big enough to do something like that. The only company big enough to be very, 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 very big. Multiple stores within store. That's what I mean by micro mall. Ah, I see, I see. I see, I see. Best Buys have a fair bit of space, so it's possible. Yeah, I guess. I just feel like the product category, or the, Target sells everything. That's like the whole thing. Unless that's all they want to sell is electronics and shit. But I feel like they would want to sell everything. Like, especially if you want to be an Amazon or Walmart competitor, you can't only sell like a small, electronics basically. Like, you got to sell everything if you want to be a competitor of Amazon and Walmart. Good with not doing grocery. I mean, I bet grocery's profitable as fuck though. There could be a lot of waste in grocery though, maybe. Grocery's a loss leader for Walmart, I think. I don't know. I wonder if we can check. I wonder if they put something like that in their earnings report or something. Grocery. Let's see. A greater concentration of e-commerce sales, including increasing online grocery sales, could result in a reduction in the amount of traffic in our stores. That's a risk. Okay. Let's see. Comparable sales in the U.S., including fuel, increased 4.8%, 4.9%. Walmart U.S. comparable sales increased 4.8%, 5.5%. With strong sales in grocery and health and wellness. Comparable sales growth was driven by growth in transactions combined with growth in average ticket, including strong sales in grocery and health and wellness. So their sales are increasing, but they don't say anything about like profits. Let's see. Increase were primarily due to strong positive comparable sales across U.S. segments, driven primarily by growth in transactions and unit volumes, which included strength in e-commerce as well as strong sales in groceries. Okay, let's see. Doesn't really say anything about profit. I think fuel might be the loss leader, potentially. Oh, right here. Wait, that's just sales, though. That's just sales. Doesn't tell you their profit on that. Just sales. I mean, they're doing a lot of sales in general, but it doesn't say anything about what their profit would be. Just for look for gross profit, it doesn't say that. Like there's a lot of gross profit for like everything, but not for specifically groceries. I don't see it. I don't see it. Increase in fiscal 2024 gross profit rate was primarily due to managing prices aligned to our competitive historic price gaps and lapping higher net markdowns incurred in prior year, partially offset by product mix shifts into lower margin categories. Yeah, it doesn't give a direct number for profit on grocery, so can't really find that. Radio Shack, Circuit City, remember them? Oh yeah, they did really well, huh? They did really well. Those companies did extremely well, huh? All their margins are on the merchandise side. I worked there for 5 years. Well, I can only take your word for it. There's no actual data to back anything. So, with no data, doesn't really matter. I don't think one store can be the comparison for the overall business. Because from what I saw, they're making 25% gross margin total. Grocery stores, from what I've been told, have been very small margins. I think, I'm pretty sure that said 25% on there. So I don't know. I don't know about that. What about Amazon Market? Yeah, I mean, Amazon just opened up or started opening up grocery stores. So there must be something to it. Almost certainly that. I mean, you either have the data or you don't. Like, that's, you can't just make assumptions about business. That's where people are getting GameStop wrong. They're just making assumptions about GameStop's business and not actually researching it. So, if you don't have the actual data, I don't know if there's, I don't think anyone can have a relevant opinion without like actual data. Amazon Fresh is profitable, I think, but I hear it's tough to stay profitable in the sector. Maybe. Need data though. You can't, like I said, you got to see the data straight from the business. Like you can't just take people's opinions and assumptions and put any weight on them. You need data. If you don't return your shopping cart, you should go to jail. That's not where the carts go. That's not where the carts go. What's up, Moose? Hope you're having a good vacation, bro. Hope you're having a good vacation. Markets closed Monday for President's Day. No. No. Don't say it. Don't say it. President's Day. No. Almost no business is going to openly display their cost to the public. Yeah, but they should show their categories and how much margin they're making in each category. I don't need to know their costs. I need to know how much margin and how much sales they're making in specific categories. So, but that's my whole point, is if you can't find that data, there's no reason to have an opinion. That's my whole point of that. You can't just assume things. Grocery could crush. Amazon and their groceries is probably more about making money on same-day delivery for groceries more than the margin on the food. Also, it keeps consumer in your umbrella of consuming. Without data, I don't even want to have this conversation, bro. We can't just assume. If there's no data to back what people are saying in the chat, this is a pointless conversation. We can't just make assumptions about how grocery performs as business or as a sector. You need to bring data. If there's no data, this is a pointless conversation. Amazon's goal is to integrate into your life, so spend all your money through them. Maybe. Maybe. If you know the price and you know the margin, anybody can do the math to calculate costs. No, you can't, because prices are different in every state. Probably most locations have different prices. You can't do that. You have to have the business as a whole. I don't think you can do that. You can't just work at one store, and that's not like that. That's not how selling product works, especially at Amazon. Especially now, they literally have pricing that updates live now. So I don't think that's not efficient. Prices are constantly changing, and prices aren't the same everywhere you go. Varley, what's up, Varley? But I don't want to have this conversation unless you have data. We're done with this conversation. So, on to the stream clip, I suppose. All right. GameStop hit with backlash after joke about trading in a woman for a PlayStation 5. After making a controversial joke about a man trying to trade in his girlfriend for store credit toward a PlayStation 5, GameStop faced public backlash that ultimately resulted in the company pulling the post from social media platforms. While GameStop was once a storefront primarily focused on selling physical copies of video games, the company has had to change its strategy in recent years. In addition to new and used video games, consumers can find a wide range of pop culture products at GameStop's physical locations, such as trading cards, Funko Pops, clothing, and plenty of other products. At the start of 2026, GameStop revealed that it would be closing hundreds of stores across the United States, a sudden move that came as a surprise to many employees and customers. When some consumers showed up at the location marked for closure, they were greeted by a sign announcing when the store would be shutting down. The notice included a coupon that customers could use at the locations that remained open. Many people felt this was in poor taste. After receiving a lot of feedback from customers over the closures and corresponding coupon, the company seems to have gotten itself into hot water once again with a social media post gone wrong. GameStop takes down controversial post after backlash. We regret to inform our customers of an incident today at store 1782, where an individual attempted to trade his girlfriend in for store credit towards a new PS5. Our associate Neve had to explain that our system don't allow for human exchanges, even though she appeared to be in good condition. We remind our customers that GameStop offers in-store credit for used consoles, games, and accessories. Significant others are not eligible for trade-in at this time. Thank you for understanding. How is this controversial? I feel like this is just a joke, but whatever. GameStop recently took to several social media platforms to share a story that was intended to be a joke. Unfortunately, the post missed the mark and stirred up a fair bit of public backlash instead. As of writing, GameStop has appeared to remove the post from its official social media platforms, though that hasn't stopped the conversation it generated. The original post claimed that a man had come into one of the company's stores looking to trade in his girlfriend for store credit in order to purchase a PlayStation 5. The original post went on to say that the woman appeared to be in good condition, but the store's system don't allow for human exchanges. While some people thought that this might be an attempt to follow up GameStop's trade-in anything a promotion with a joke, many others took issue with the post. How can you take issue with that? That is crazy. Shortly after the post went up, a lot of people simply said that the joke wasn't funny. Others were quick to point out that the post connection to human trafficking. What? What? An extremely serious topic that doesn't lend itself to humor. In a post on Reddit, one person also suggested that the image itself appears to have been made by AI. The original post claims that the woman behind the counter is an employee named Neve, a known fictitious AI character who has appeared in posts by the satirical Facebook page Selena52 Truck Stop. A few people were quick to declare that the post was AI slop, even poking fun at how shelves appeared to be too well stocked for a GameStop. The use of AI in gaming has already proven to be a controversial issue for many consumers, because some players to call GameStop's use of technology, quote, out of touch. I can't, bro, what? I can't believe they would even compare that post as like a human trafficking thing. It's just a joke. It's just a joke. Crazy. This isn't the first time GameStop has courted controversy with a social media post that missed the mark, as the company recently commented on Amazon's first official look at Sophie Turner as Lara Croft. The actress is perhaps best known for her portrayal of the character Sansa Stark in the hit television series Game of Thrones, but that could change with the upcoming Tomb Raider show. In the image, Sophie Turner is in her full Lara Croft costume, sporting a dark teal tank top, black shorts, and circular sunglasses. It's a classic look for the character, and the reception from fans appeared to be positive. GameStop, however, reposted the image on Twitter with the statement, "This is not Lara Croft." Many fans were immediately unhappy with the claim, with one person suggesting that the company has bigger problems to address, referencing the closure of hundreds of stores. While the company has received a lot of criticism from gamers lately, many are still hopeful that GameStop will find a path forward that benefits both customers and employees. I mean, I think the point and the reason why they reposted that image and said this is not Lara Croft was because her hair was red, and Lara Croft's hair isn't red. So, you also have to know the context of what you're talking about. And yeah, crazy, bro. I can't believe people took that post seriously. Like, it's just a joke. It's a joke. And I don't know if that's AI. Like, I guess she kind of looks like AI. Maybe it's AI. I don't think that's AI though. Maybe she's AI, but I don't think the overall picture is AI. Maybe, I don't know. Maybe GameStop stole her. Maybe she stole her, or maybe they stole her, for the promotion. A lot of things it could have been. Very odd. Very odd. Very odd. According to the Food Industry Association, the average profit margin for a grocery store is 1.6%. All right. Food is tangible, you need it to survive. You remember how it makes you feel after you eat it. Small margin, but it could impact your other margins. Costco, in my opinion, keeps their hot dog value for this reason. That's a good point. That's a good point. Well, there you go. See, that was easy. Look up some data. There you go. Simple. You also could have looked up, like, what company is it? I think, no, Albertsons is more like a distribution than a grocery store. Does Amazon say anything about their grocery category in their earnings? What's up, Kristen? Didn't even come play Rocket League. Not surprised. Not surprised. Hope you're doing good, though. See, this could be a red flag too. Some of the products we sell or manufacture expose us to product liability or food safety claims relating to personal injury or illness, death, or environmental or property damage, and can require product recalls or other actions. So even beyond the margin, like, there would be a lot of risk to selling food as well. But none of these businesses talk about it. I know there's a public traded groceries. I just can't think of what it's called. There's Kroger. Sprouts would probably be a good one. Check Sprouts. SFM. That's basically specifically a grocery store. Let's see here. I mean, that looks good. I mean, Sprouts is making 38% margin. So I don't know if oh wait, that's cost. Let's see. No. Yeah, Sprouts is making like 30% margin, bro. Over 30%. So I don't know if, unless they're lying on their earnings report. And Sprouts is strictly a grocery store. So I think that's a big gap between 1.6%. You're talking 38%. I mean, they made 380 million net income just from being a grocery store. I mean, I guess you could just do the math like this. 7 billion net sales. So 380 million divided by basically 7.7 billion. I think this will be the best way. 4%. Okay. That's probably going to be the most accurate thing, maybe. So yeah, I guess 4% is not that much. But still brought in a lot of net income. A lot of sales, a lot of net income. But I guess there is a lot of risk to selling grocery. So maybe it's not going to be Target. Maybe it's not. Maybe it is going to be. Maybe it is going to be Macy's. Maybe it is going to be Macy's. Who knows? Amazon's wet dreams the moment that when you're making food, need something, then you say, Alexa, order this to my house, charge you a premium for the convenience. Ah, good point, good point. 13 hours yesterday? Well, isn't, I don't know, why don't you just like relax? Chill? It's a lot. Why don't you chill, bro? Allegedly, Kristen? Yeah, exactly. Allegedly. Allegedly. See the GameStop tweet? Nah, I don't have Twitter. I deleted it, and I'm not reactivating it. I hate Twitter. If it's on Reddit, I'll see it. But it's not on Reddit, so I'm not gonna see it, apparently. I really do think I'd like that game. Seems Mario Kart-esque. Oh, you that game, you would hate it. It's frustrating. The real Kristen would have skipped work and played Rocket League. Definitely not. Definitely not. Always have work to do. Yesterday I had to finish a product. I remember all the shit about you guys. I bet you can't even name what I do for work, even though y'all know. You're right, I can't. You're right. You're like I don't even remember. You gotta, bro, I have a bad memory. And I don't even remember the last time, like, we actually talked about anything, so. I tend to forget things. Jeff Jolly. Jeff Jolly, what's up? Cyber hacker working for Elon. Online banking. See, my guess was gonna be terrible. I thought you were like a data analyst or some shit like that. So, good thing I didn't try to guess. Good thing I didn't try to guess. You can't remember anything about me, and I remember a lot. You can't blame me. It's a little different when you don't talk to someone all the time. There was a time we used to talk like every day, all the time, and I probably remember it a lot. But do you even remember the last time we talked outside of this chat? And like, you barely even talk in the chat when you come here. So like, how do you expect me to remember these things when we don't even talk? Like my brain is retarded, bro. Like literally, I forget shit so easily. I literally might be retarded. I forget things way too easily. Especially like if it's someone I forget people's names, bro. Like I'll go to the skate park and see someone that I've talked to like a bunch of times, and if I just haven't talked to them in a long time, like I'll forget their name, bro. Like I have such a bad memory. Such a bad memory. I don't even drink. that last stream I was drunk on was probably the first time I've drank in like a year, or maybe close to a year. I think last time I drank was in Vegas, and that was like April sometime last year. Oops. Okay, got that. GameStop still shitting. Now you're selling through the buy line. You got a nice little bounce off of it. Good little trade, but now you're selling through it. I think the overall market's still selling off quite a bit. Yeah. Down quite a bit on the overall market. Alrighty. Alrighty, where's the lightning packs, bro? I'm trying to hit that lightning pack, bro. Give me that lightning pack, brother. Oh, dude. Oh, dude. Where's my lightning pack, dude? I'm trying to hit some lightning pack, dude. Give me that lightning pack. I want to see that GameStop tweet. But I don't want Twitter, bro. I literally can't. I can't do it, bro. Twitter is so trash. It's like nothing but rage bait and girls showing their asses. And I just like... What is that? What is that called? I forget what it's called. There's like a term for... girls making like shorts. It's not catfishing. God, I can't remember the term. It's like some like tease term or some shit. I just can't think of what it's called. Thirst trap, yes. I can't handle it, bro. There's too many thirst traps, too much rage bait. It's not for me. It's not for me, bro. Maybe they'll have it on r/GME? No. Well, looks like I'm not gonna be able to see it. Just fill in the gap, maybe. Corey can't remember yesterday's stream. I mean, there's some truth to that. There is some truth to that. That may have been a joke, but there is a lot of truth to that, bro. I don't. I don't. I know we covered, what did we cover yesterday? I actually don't remember, bro. See, this is what I'm telling you, bro. I'm like legitimately stupid, bro. I'm actually dumb. Like, I legit don't even remember. Oh yeah, App Lovin'. Like, if that doesn't show you how dumb I am, I mean, oh man, that's hilarious. Woo, yeah, McLovin. That shit's so funny, bro. I wish I was like acting, but I legitimately didn't remember. I wish I was acting, but I'm just like actually just like so forgetful, bro. I'm so forgetful. I don't know why. It's funny because like certain things like I'll never forget, and like but like just like dumb shit like that, it just I just don't think about it, When I get off stream, I'm not really like thinking about what we talked about and what we did. So like I just forget about it. So funny, bro. Gap was 23:38. Oh, all right, the show. McLovin. Too much ganja. Pass the Dutchie to the left hand side. Pass the Dutchie to the left hand side. Please stop saying you're dumb. Alright, I will. I mean, I won't, but there's some truth to that. There's some truth. Some truth. I wouldn't say it if there wasn't truth to it. Pass the Dutchie to the left hand side. Airbnb. I don't think this earnings will be that hype, but I'm kind of excited for this one. I've never listened to Airbnb earnings call or really looked into their business, so this should be maybe it'll be an interesting earnings call. Maybe. Fucking ads. Fucking ads. I'm sorry. I wish I didn't have to do ads, but I'm a brokey, so that's I gotta play ads, unfortunately. You can get an ad blocker though. Those exist. Or you get like YouTube Red or something. I think there's no ads on YouTube Red. Can't remember. Got that El Dorado, bro. When my boy from Colorado hooked me up with this. Some nice Colorado spring water. Tastes like if you compare it to like Arrowhead, bro, it's like night and day. Night and day difference. Colorado spring water's gas. Down a guys have been tightened up. Next stop's Netherlands, Australia. So many places. Nice. Should have been nicer to her. She could have shifted some money to your account so you wouldn't need to run ads. Nah, it's fine. It's fine. It's fine. I've accepted my fate on the Kristen front, so it's all good. Matthew lives in Canada now, actually. Matthew moved to Canada a few years ago. But yeah, I think he was from the Netherlands. But yeah, he's addicted to gambling. He became a gambling addict. But last time he was in the chat, he said he was getting back into camping and stuff, so but I haven't seen him in the chat in a long time. He only goes camping when the weather's negative degrees, because he's that guy. He's that guy. His AMD position's way up, so he's probably good. That's probably why he hasn't been here. He's like, those losers are still talking about GameStop. I'm already rich. Like, fucking GameStop? Why would anyone talk about that? That trash. Why didn't they buy AMD? I'll send Corey money if he needs it. Well, good to know, but I don't. I mean, I do, but I don't. I'll say that. I do, but I don't. I was gonna say something, but I'm not saying it here. We're done with that. Yeah, he's a gambling addict now. He's a gambler. He loves his Dragon Links. Or no, no, he plays Huff and Puff, actually, I think. He's a Huff and Puffer. I couldn't believe it either. Camps in freezing weather, that worried me when he did that. Like, no one knew where he was. That's why he does it. That's literally why he does it. Because he doesn't want to be around people. And he doesn't want anyone knowing where he is. That's literally why he does it. He just wants to be by himself. I miss Matthew, though. Well, I like when he I love when he pops in. I'm there with you. I do, but don't. He made it seem like he didn't like people. That's why he liked the cold winter. Yeah, that's Matthew. That's Matthew, bro. What if they avalanched on him? Well, at least he's gonna die doing what he loves. You know? If you're gonna go out, you might as well go out doing what you love, right? Is that why he's been gone? Hopefully not. Hopefully not. That'd be sad. I feel like he popped in here not too long ago, though. Like, maybe like a month ago. I swear I saw him in here, and we were like watching something, so I don't even think I said what up to him or anything. I swear I can't remember, though. I know he stopped in here not too long ago, though. Still got 40 minutes till the market closes. Ugh. What do we do for 40 more minutes? Pokemon? Maybe? Rocket League? I don't know. I don't know. Lightning packs? I wish. I wish. I wish. No lightning packs, though. I want to see that OSRS tweet, bro. I want to see it. Crack up in some cold ones? No. I am not drinking again. That shit sucked. I ain't doing that again. And it wasn't even worth the celebration. Because now we're just back. We're just back in the shitter. Wasn't even worth it. Back in the shitter where we belong. The PA resembles the aftermath of drinking. You feel good, then you don't. Forgot those were celebration drinks, and she's gone. And it's gone. Too late, too early to celebrate, I guess, huh? Too early to celebrate. It's fucking cold, bro. I need a jacket. Freaking cold. I don't drink. Wait, really? That might be the only thing I remember. Legit, that might be the only thing I remember. Get some Merger Michelobes? Merger Michelob Monday, baby. Triple M. I was just joking. I remember some things. Cheers! What's up, Hugh G? What's up, Hugh G? Thanks for commenting on that video, bro. I didn't know it got muted, but I figured it out. I had to update my video editing software. But I appreciate you commenting and letting me know. I'm in a routine. I couldn't drink and break it. It would be bad. Probably feel like ass. Yeah, it's not worth it, bro. It's not worth it. What's up? Hey, Ron. Hey, Ron. Back to the grind, but gotta at least get a daily cheers in. Well, cheers, Hugh G. Cheers, bro. Good luck. Good luck out there. Bring in those bags, bro. Bring in those bags. What are we cheers into? I don't know. We're just cheersing. It's a beautiful day. It's a beautiful day. Not a safe place. Story time next week. Hell yeah, I'm looking forward to it. I'm looking forward to the story time. It's a beautiful day, bro. It's a beautiful day. Like, you guys don't see it? You guys don't see it, bro? The stock's actually up. You didn't know that? The stock's actually up, bro. Watch this shit. Watch this wizardry, bro. About to do some wizardry right now. forgot how to invert it. Oh, there we go. Ah, see, it's up. It's up. It's perfect. Looks good. That's all we needed. There you go. It's up. To the moon, baby. To the moon. That actually does look pretty bad. Looks flat though. Looks like you're waiting on a acquisition. That's what I mean. Crazy chart. Crazy chart. But yeah, nice and green. Looks good. Looks good. Earnings. Oh yeah, there is. Isn't earnings next month? When is earnings? It's not till April, is it? Anyone know? They haven't even given a date yet, right? I hope it's on April Fool's Day. That'd be funny. What day is that? Is that on a weekday? No, it's on a Wednesday. It could be. It could be. It definitely could be. All right. Enough of that. That's funny, but we'll see. We'll see what happens. We'll see what happens. Merger announcement. You think on earnings it'll get announced? I don't know. I don't know if it'll get announced on earnings. I think after he gets his pay package approved. Yeah, good point. Good point. Good point. If he announced the acquisition now, the stock would just rip. Maybe. What if it goes down? What if it goes down when they announce the acquisition? Could you imagine? Everyone's so bullish on the acquisition. What if it goes down? Oh, that'd be crazy. I don't think it will, but that'd be crazy. Buy more. Fair enough. Fair enough. Only if only I had money to buy more. Literally all in. I literally can't buy more. Unless I make more. But pretty tough to do when you just do this for a living. I don't have a big enough following to... Yeah. You know. Making like a couple bucks a stream. Unless double prizes comes in. I think GME reverse merges into a bigger company and we get like a 5-to-1 ratio of the new company. No. I think it's going to be acquisition. I don't think it's going to be a merger. That'd be pretty wild if a bunch of companies merged together. But I don't know. I think they're just gonna buy something. We'll see though. We'll see. Hopefully it comes sooner than later. Not, not because I want the stock price to go up. I just want to know what the hell they're doing. Like, what if they acquire something I think is trash? That would be funny. That'd be pretty interesting, actually. Like, what if they acquire something that I don't even like? Like, that would be interesting. Just thinking about Ryan Cohen's ownership and other stocks. What does he own? To use his position along with GME funds to start a takeover of a much larger company. Probably not. You would need so much money. And I don't think you're going to get a deal buying shares on the market. I think you're going to get, from a business perspective, you'll get a better deal buying an actual business off market. Like, if you're just going to buy out the shares, I don't think you're getting a deal that way. Hugh G probably left. He's working. I just hope it's Costco. That'd be pretty wild. That seems a little too big, but that would be very, 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 very big. I just wish they would announce it, because I'm sick of speculating. I'm sick of speculating on what it's gonna be. I just want to know what it's gonna be. I want to speculate on what they're gonna do. Sure, whatever it is, though, Ryan Cohen's a badass, so even if it is something I don't like, I'll probably be forced to still continue to see it through. I need to go to the bathroom. I'll be right back. Ow! I'm back. Would be hilarious if he launches a shitcoin. I will sell my investment immediately. Literally. There will not be any question. I don't fuck with shitcoins. He's got a 20-cent bounce on the stock, though. Not a little candle right there. 20-cent minute candle. I don't think they would do a shitcoin, though. Ryan's a real business person. The stock likes the talk of Ryan Cohen being dumb enough to make a shitcoin. I guess. I don't see that. Ryan's a smart businessman. He knows what he's doing. And I don't think he's trying to scam people. I think he's trying to do right by the shareholders. But you never know. You never know. Doofus days. The doofus days. So many people would get so triggered when you called him little doofus. Do you remember when we went in that random live stream and asked what he thought about that guy, what he thought about Lil Doofus? That shit was funny, bro. That shit was funny. Like, I don't know who Lil Doofus is. But if you're talking about Ryan Cohen, I can't remember. It was something like that. I can't remember his exact response. I don't know who Lil Doofus is. That fuzzy memory strikes again. Bro, it's bad. But it's also because I take in a lot of information on a daily basis. That's part of it. Because if it's something like actually important, I'll always remember. But it's just most things aren't that important. So it's like, it's kind of like I don't know, I feel like my brain's really good at filtering out things, but it's also really bad at remembering things. Good to know. Shut up. Blame yourself. Blame yourself. You have no one else to blame but yourself. Pew pew. Finger guns. I'm fucking me and my cousin beat Grand Theft Auto 5 the other day. We beat it in like 5 days. Now we're replaying Red Dead 2. And good lord, is Red Dead the slowest fucking game ever made, bro? Oh my god. It is so slow, dude. Grand Theft horse riding, bro. Horse riding simulator. Red Dead horse simulator. Like, it is the slowest game, bro. It is actually the slowest game. It's pretty fun. You know, obviously the graphics are amazing. But God, Red Dead is kind of trash. Like, in a lot of ways, it's a really good game, but the amount of horse riding you do in that game sucks. There's too much horse riding. Too much horse riding. I feel like I'm in a Old Town Road music video. I don't even think there's horses in Old Town Road. Now that I think about it. Got the horses in the back. 15 minutes till the market closes. So exciting, so exciting. Can you feel it, Mr. Krabs? Can you feel it, Mr. Krabs? Apple's leading the way down? Whoa. Apple rejected an all-time high? That's crazy. It's either the potential start of a something, or you're about to get a massive rip coming up. I mean, obviously I'm bullish, so I'm going to lean towards the massive rip. But there's a lot of bearish people out there. God, Johnson & Johnson just ripping, bro. It broke out, just has never looked back. So impressive. So impressive. Has anyone posted that Twitter tweet on Reddit yet? Someone's gonna have to send that to me, I guess. Nobody's posted it. Why? The Twitter tweet? Yes, the Twitter tweet. You got a problem? You wanna go, bro? Those are fighting words, bro. Those are fighting words. I would never hit a lady. I would never hit a lady. Oh my god. I won't say the rest, but if you know, you know. Jokes, I joke, I joke. I joke, I joke, I kid, I kid. I kid, I kid. She a classy lady. Classy. Well, I'm a classic man. I'm a classic man. You would be me if you looked this clean. I don't know the lyrics of that song, actually. I don't know the lyrics to that song. That song's banger, though. You can be mean when you look this clean. Calling on me like a young OG. Your needs get met by the street, elegant, old-fashioned man. Yep, that's basically me, bro. That's basically me. Sing some Bone Thugs? I don't know Bone Thugs. I don't listen to Bone Thugs. I only know the thuggish, ruggish bone. That's all I know. The thuggish, ruggish bone. That's the only song I know, and I only know that part. I don't think I know any other Bone Thugs songs. I'm trying to think. I don't listen to Bone Thugs. I don't be listening to Bone Thugs. Shake my head. You're such a hater, bro. You're such a hater, bro. Always judging. Always judging me. You don't know Po Pimp? No, I don't. I don't know that. I don't know who fucking Po Pimp is. Play Po Pimp? I can't play music on stream. Or I definitely would. We'd be listening to music right now if I could listen to music on stream. Corey heard of Eminem and stopped there. I don't even listen to Eminem anymore. That was when I was like 10. Eminem was the shit when I was like 10 years old. I used to listen to fucking like punk rock, bro. Like fucking like Blink 182 and shit. Like emo rock. I wasn't bumping rap. I was slitting my wrists and listening to emo music. And I was listening to the John Cena mixtape. It's John Cena. I was listening to Pac when I was 12. Gangster. You a gangsta. All the real rappers are dead? Debatable. Debatable. There's good rappers. There's good rappers. There's a lot of good rappers, actually. Is that how many times you told me? 234 trillion 92 billion 849 million 203,480,000 times. Times 1,000. That's a lot of times. That's a lot of times. That's a lot of times. And I still don't remember. I'm just kidding. Of course I knew that. Of course I knew that. Older music has real soul to it. That's fair. That's fair, but there's still some good new music. Ugh. You just gotta listen to the right shit. You can't be listening to fucking Tekashi 6ix9ine and be like, yeah, rap sucks. You can't be listening to fucking Lil Xan and be like, yeah, rap sucks. You gotta find like a good rapper. Like Mercules or something. Or like Joyner Lucas. I mean, Joyner Lucas is okay, but Mercury's he's bangs, bro. Mercury bangs, bro. Chris Webby's arguably better than all of those rappers, if I'm just being honest. Call or put for Airbnb. I'm gonna do a reverse iron condor, bro. Reverse iron condor with a fucking, I don't know. I don't know, bro. I don't know. I'm gonna do a credit spread. I'm going to do a reverse iron condor with a credit spread on the upside and a debit spread to the downside. That's what I'm doing, bro. Professional. Play Po Pimp? I don't know Po Pimp. I don't know Po Pimp. I promise. I don't listen to Bone Thugs. I'll listen to it, but I promise I don't know what it is. Bro, I'm glad I muted that. You guys should have heard that ad that just played, bro. You guys should have heard that ad, bro. I'm glad I muted it. Holy fuck, that ad was aggressive, bro. That ad was so aggressive. Jesus Christ, dude. Yeah, I've never listened to that. I don't think I would listen to that, though. That's not for me. That's not for me. Bull credit spread. Maybe GME BB can be your Valentine. I wish. She doesn't like me, though, so probably not. My hand's gonna be my Valentine. More than likely. Just gonna be alone. Fucking jerking off. Just fucking jerking off. Everything's down. Except Fastly. Fastly is ripping. That's what I meant, mixing up rappers. V-Day is dumb. I mean, maybe I don't know. I'm not gonna say anything I want to say. It was bad enough when you came in the stream when I was fucked up. I'm not saying anymore. I'm not giving you any more ammo. No more ammo for you. You know what? You enjoy your Valentine's Day. I hope it's terrible. I'm just kidding. Got an ad in the middle of the rant. Good. 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 You didn't need to hear anything I said. It wasn't important. 3 minutes till the market closes. Make her a Valentine's card. You never know. Nope. No, sir. If I'm just being honest, I refuse to put any effort towards, like, anyone anymore. Whether it's, like, friends, crushes, whatever it may be. I'm not putting effort towards anyone. I'll put effort towards my stream, my YouTube channel, and that's it. That's it. Oh, you're out, Varley? No! No, Varley, no! Alright, Varley, you have a good rest of your day, bro. You have a good rest of your day. God bless, bro. God bless. Much love, Varley. Appreciate you, bro. Thank you for supporting the stream. The stream! The stream! One more minute. One more minute. What's Max Payne? Are you talking about the video game? I love Max Payne. It's a really good game. I fucking love Max Payne, bro. On PlayStation 2? That's such a good game, bro. I love it. Nothing better than Max Payne. Max is in pain? Yeah, like the girl on Stranger Things? She's definitely in pain. Those were the days. I played the shit out of those two. I mean, I was joking, but Max Payne is a good game. It is a really good game, bro. There were some solid games on PlayStation 2. Some solid games. Well, there's your close, chat. There's your close. Market's down quite a bit, especially the Nasdaq. Nasdaq's down quite a bit. Oh, excuse me. Excuse me. But welcome, Leche. Welcome. Oh, I got hiccups. No. No hickey-ups. Does someone have Discord who wants to send me that tweet? Since nobody's going to post it on Reddit for some reason. Still no lightning packs either? Like, what is going on? Where's the lightning pack? Was that just a troll? Did we get trolled? Trying to hit that lightning pack, bro. Trying to hit this lightning pack. I don't have your Discord. It is Roaring Corey. Same as the YouTube channel. I believe. Let me double check actually. Pretty sure that's what it is. Oh, my boy Jake messaged me back. My boy. Yeah, Roaring Corey. Am I opening the pack? I don't know. It depends how much it costs. Depends how much it costs. Is Airbnb out? You got the homie Jake on Discord? Oh no, not your Jake. One of my friends named Jake. Used to play PlayStation with him back in the day. He's the only reason I have Discord now. I made the Discord just to talk to that kid. Basically. I think Airbnb's earnings are out. I just don't see the numbers on their website quite yet. Nope, right here. Nice. Nice. Shareholder letter. What do we got, Airbnb? Let's see. So their Q4 2025 revenue was $2.8 billion. Fiscal year was $12.2 billion. Net income was $341 million. $2.5 billion for the full year. Adjusted EBITDA, $786 million. $4.3 billion for the whole year. Free cash flow, $521 million. $4.6 billion for the year. Gross booking value, $20.4 billion. $91.3 billion for the year. Nights and seats booked, 121.9 million, and 533 million for the year. Q4 2025 shareholder letter. Airbnb closed out 2025 with strong momentum, delivering double-digit growth across our key top-line metrics during the fourth quarter. Despite a tough year-over-year comparison, our business accelerated in Q4 compared to Q3. Revenue grew 12%, exceeding the high end of our guidance range, while gross booking value grew 16% year over year. Our highest growth quarter in more than 2 years. Nights and seats booked rose 10%, marking our strongest growth quarter of the year. Our overall business performance was driven by the strength in demand across all regions and ADR. These results reflect the strength of our core business and the durability of our long-term strategy. We are driving growth by staying focused on 4 key areas: making Airbnb service better, bringing Airbnb to more parts of the world, expanding what we offer, and integrating AI into our app. Here's some highlights. We're making Airbnb better for hosts and guests. We're continuously improving the experience for hosts and guests, and in Q4, these efforts drove meaningful growth. We focused on pricing and flexibility, including reserve now, pay later. We know flexibility matters to guests, which is why we introduced a feature in the US that allows guests to reserve an eligible stay and pay $0 up front. The positive response from guests was immediate, and this feature contributed to the acceleration of bookings we saw in Q4. In February 2026, we completed testing reserve now, pay later across additional markets, and currently plan to make it available to even more guests globally in 2026. Updated cancellation policies. In October, we announced new cancellation policies to make it easier for guests to book a stay, even if their plans change. Hosts can now offer free cancellation up to 14 days before check-in under a new limited policy, and we're giving guests who book more than a week in advance 24-hour grace period after their reservation is confirmed for refunds or shorter stays under 28 days. These changes helped to reduce customer service contacts and increase bookings in Q4. We're bringing Airbnb to more parts of the world. Airbnb is still in the early stages of global growth. While we operate in more than 220 countries and regions, the majority of our business is concentrated in 5 countries, highlighting the significant opportunity ahead. In 2025, we made a meaningful progress outside of our core markets by making Airbnb more locally relevant. Origin nights booked in our expansion markets grew at roughly twice the rate of our core markets, a clear signal that our strategy is working. In Q4 2025, we saw particularly strong performance in Brazil and Japan, and India. And India became one of the fastest growing countries on an origin basis, with nights booked up 50% year over year. In addition, first-time bookers grew at a double-digit rates across all 3 countries, with India up more than 60%, showing how we're bringing new travelers to Airbnb. We're expanding what we offer. We see a big opportunity to serve more types of trips and use cases on Airbnb. While homes remain at the heart of our platform, we're expanding to meet the needs of more guests. Since launching Airbnb services and Airbnb experiences in May, we've been focusing on scaling high-quality supply. We've onboarded significantly more hosts across both offerings in the second half of 2025, and we are piloting new services with partners, including grocery delivery. Now, that's kind of interesting. In Q4, services and experiences brought new people to Airbnb. In fact, almost half of experiences bookings were not attached to an accommodation booking. We're also capturing trips where a hotel may be a better choice. We started with a pilot in cities that are supply constrained due to excess demand or regulations. In Q4, we began partnering directly with boutique and independent hotels in New York, Los Angeles, Madrid, and San Francisco. We're seeing promising results and plan to expand to other key markets later this year. We believe bringing more hotels onto the platform can increase our total addressable market, convert more existing guest demand, and drive repeat bookings across both hotels and homes. We're integrating AI into our app. We're continuing to lay the foundation for a more intelligent, more personalized Airbnb. Here's some highlights for Q4. AI customer support in more places. AI-powered customer support has been rolled out for English, French, and Spanish-speaking users across the US, Canada, and Mexico. The results have been impressive so far this year. When users message our AI assistant, about a third of all issues are resolved without needing an agent. We've also seen a significant reduction in resolution time. We expect to roll out AI customer support globally later this year. AI-powered search. We're applying AI to how people discover and plan trips on Airbnb. We're taking an iterative approach to get this right. Early tests are focused on giving guests a more natural way to describe what they're looking for and ask questions about the listing and location. Over time, this will evolve into a more comprehensive and intuitive search experience that extends through the trip. Outlook. Our growth and strong performance in 2025 were driven by disciplined execution. We focused on what matters to our hosts and guests, including better search, improved merchandising, more flexible payment and booking options, and simplified fees. These product improvements supported double-digit growth across our key top-line metrics in Q4. Looking ahead in 2026, we're not just maintaining our momentum, we're accelerating. We have the right team and strategy in place, and we're executing with greater focus and speed. More importantly, we believe that we're giving people more of what they want. In a world that's becoming increasingly artificial, we're using technology to help bring people together in the real world. This is what makes Airbnb unique, and we believe it will be a powerful driver of growth for years to come. Q1 2026, we expect to generate revenue of $2.59 billion to $2.63 billion, representing year-over-year growth of 14% to 16%, inclusive of approximate 3.4 in exchange tailwind after factoring in our hedging program. We expect our implied take rate in Q1 2026 to be up slightly year over year. We expect gross booking value to increase in the low teens year over year, driven by high single-digit growth in nights and seats booked, and a moderate increase in ADR due to the price appreciation in FX. We expect adjusted EBITDA margin to be approximately flat year over year. Full year 2026. For 2026, we expect year-over-year revenue growth to accelerate to at least low double digits. This is driven by the sustained strength in our core business, healthy demand, and continued execution across our key growth initiatives. For 2026, we expect our adjusted EBITDA margin to be stable year-over-year as we reinvest top-line efficiencies to support growth across the business, primarily in marketing, product, and technology. Wow. They have a lot of information on this. That's actually really impressive. Very impressive. The stock's up 3%. I'll get to the chat in a second. More reservations, less hesitation. We're committed to making travel more flexible and convenient for everyone. With Reserve Now, Pay Later, guests can book homes with $0 up front. After a strong U.S. launch with over 70% adoption by eligible bookings and testing in other markets, we're rolling it out to guests in 2026. Business and financial performance. In Q4 2025, we recorded double-digit growth across our key top-line metrics, delivering the highest year-over-year growth for nights and seats booked and GBV during 2025. Nights and seats booked grew 10% year-over-year, representing a sequential acceleration compared to Q3 2025. In Q4 2025, we observed relatively consistent year-over-year trends in terms of market type and travel corridor, and saw a continued lengthening of lead times. Growth continued to be driven in part by our app strategy, with nights booked on our app in Q4 2025 increasing 20% year-over-year. App bookings in Q4 accounted for 64% of total nights booked, up from 60% in the prior year period. In addition, we saw year-over-year growth of first-time bookers accelerate to 8%. In Q4 2025, driven by strong results across all age cohorts. In Q4 2025, GBV was $20.4 billion, representing a year-over-year increase of 16% or 13% excluding Forex. The year-over-year growth in GBV was driven by strong growth of nights and seats booked, as well as an increase in ADR, which benefited from FX tailwinds during the quarter. ADR was $168 in Q4 2025, increasing 6% compared to Q4 2024. Excluding the impacts of Forex, ADR in Q4 2025 increased 3% year-over-year and was up across all regions, largely due to price appreciation. Geographic performance. We're focused on expanding Airbnb to more parts of the world. While timing and investment vary by market, our strategy is to make Airbnb local and relevant by improving product market fit, building brand awareness, and driving traffic. During 2025, the average growth rate of nights booked on an origin basis in our expansion market was roughly twice that of our core markets. In North America, we saw mid-single-digit growth of nights and seats booked during Q4 2025 compared to Q4 2024. Driven by continued strong demand for domestic travel and trips with longer lead times, ADR in North America increased 5% in Q4 2025 compared to Q4 2024, primarily driven by mix shift. Growth in short-term stays and entire homes, particularly listings with 4 or more bedrooms, continue to outpace long-term stays, trips of 28 days or more, and private rooms, respectively helping to drive the mix shift. Now that's interesting. That's interesting. EMEA. In EMEA, we saw high single-digit growth in nights and seats booked during Q4 2025, representing an acceleration compared to Q3 2025 due to a broad improvement in demand across both core and expansion markets, including key countries like the UK, Spain, and Italy. ADR in EMEA increased 12% in Q4 2025 compared to Q4 2024, primarily driven by Forex. On an ex-Forex basis, ADR increased 4% compared to Q4 2024, primarily due to price appreciation. In Latin America, we saw high teens growth in nights and seats booked during Q4 2025. ADR in Latin America increased 9% in Q4 2025 compared to Q4 2024, primarily driven by Forex and price appreciation. On an ex-Forex basis, ADR increased 3% compared to Q4 2024. Brazil continued to drive meaningful growth across the region, with origin nights booked increasing over 20% and the number of the first-time bookers increasing 17% in Q4 2025 compared to Q4 2024. Additionally, we saw a strong sequential acceleration of growth in Origin nights booked in Mexico, up high teens on year-over-year basis in Q4 2025, further demonstrating the success of our global expansion strategy within Latin America. In Asia Pacific, we saw mid-teens growth in nights and seats booked during Q4 2025. ADR in Asia Pacific increased 2% in Q4 2025 compared to Q4 2024, primarily driven by price appreciation. On an X4X basis, ADR also increased 2% compared to Q4 2024. Our expansion playbook in Asia Pacific continues to yield positive results. In addition to continued strength in domestic travel in Japan, Q4 2025 nights booked on an Origin basis in India grew 50% year over year, and first-time bookers grew more than 60% year over year. Wow. That's pretty impressive. Supply. We ended 2025 with over 9 million active listings around the world. Wow. During Q4 2025, active listings grew relatively in line with the year-over-year increase of nights and seats booked. Additionally, we continue to see growth in both high-density urban and non-urban destinations, with the most growth in those regions with the highest demand, Latin America and Asia Pacific. We remain focused on improving the quality of supply on our platform to help guests find the best places to stay. Since launching our updated hosting quality system in 2023, we've removed over 550,000 listings, and we saw a year-over-year reduction in customer service issue rates and credit card chargeback rates in 2025. We also made it easier for guests to find the best place to stay with guest favorites. Since launch, we have seen over 500 million nights booked at guest favorite listings. Airbnb is impressive. I mean, the stock's probably overvalued, but overall, very impressive business. And they have a lot on here, too. Pretty impressive earnings report as well. I need to go to the bathroom. I'll be right back. I'm back. Yeah, Airbnb's ripping. 2373. I don't think the lightning packs are out. No. Nothing. Nothing. Oh, look, someone added me. I'll add them. Okay. All right. Revenue of $2.8 billion in Q4 2025 represented a year-over-year increase of 12%, which was primarily driven by strong growth in nights stayed and a moderate increase in ADR. Net income of $341 million in Q4 2025 was lower compared to Q4 2024, as higher revenue on a year-over-year basis was offset by planned investments in new growth and policy initiatives, as well as approximately $90 million of non-income tax matters. Net income margin was 12% compared to 19% in Q4 2024. Oh, their margin actually went down. For the full year 2025, our effective tax rate was 20%, inclusive of the recording of one-time $213 million valuation allowance against our CAMT credits, partially offset by a one-time release of a $60 million uncertain tax position relating to prior years and an ongoing benefit on foreign-derived intangible income. Starting in 2026, we expect our long-term effective tax rate to decline to the mid to high teens due to the enactment of the One Big Beautiful Bill Act on July 4th, subject to variables including profitability, stock-based compensation deductions, the impact of uncertain tax positions, and changes in tax law. Adjusted EBITDA in Q4 2025 was $786 million, increased 3% compared to $765 million in Q4 2024. Adjusted EBITDA margin in Q4 2025 was 28% compared to 31% in Q4 2024. Monetization and take rate. During Q4 2025, the implied take rate, defined as revenue divided by GBV, of 13.6% was down year over year compared to 14.1% in Q4 2024, primarily due to Forex and the timing of when guests booked their travel and when guests stayed. Since the introduction of paid guest travel insurance in 2022, we continue to see increased adoption of the offering. During full year 2025, revenue from guest travel insurance, which is available in 12 of our largest countries, increased approximately 40% year over year. Beginning in October, we started taking steps to simplify our fee structure, which we believe will help our hosts price more competitively. We began migrating property management software hosts on our split fee structure, where hosts paid a 3% fee and guests paid a separate service fee, to a 15.5% single service fee. Additionally, most non-PMS hosts on our platform that were previously subject to our single fee structure are now subject to the 15.5% fee as of December. These hosts are able to adjust their prices to maintain the same net earnings, and guests will continue to see full price up front. Stock-based compensation. For full year 2025, stock-based compensation expense increased 13%, driven by headcount growth. In 2026, we anticipate the year-over-year growth rate of SBC and headcount will be lower than 2025. Their revenues are going up. Their net income, they had solid net income last year, but their net income is actually going down. EBITDA is going up a little bit. Net cash provided by operating activities, that's up quite a bit. Free cash flow's up. And their share count is down. So they've been doing buybacks, I guess. We repurchased 1.1 billion of Class A common stock, help manage the impact of share dilution. Nice. Nice. Okay, for the balance sheet and cash flows, for the 3 months ended December 31st, 2025, we reported $526 million of net cash provided by operating activities and $521 million of free cash flow, highlighting the strength of our cash-generating business model. As of December 31st, 2025, we had 11 billion of cash, as well as 7 billion of funds held on behalf of guests. Oh, excuse me. Capital allocation. During Q4 2025, we repurchased 1.1 billion of our Class A common stock. As of December 31st, 2025, we had the authorization to purchase up to 5.6 billion of our Class A common stock under the 6 billion share repurchase program announced last year. The repurchase program continues to be executed as part of a broader capital allocation strategy, which prioritizes investments in organic growth, strategic acquisitions or partnerships, and return of capital to shareholders. In that order, our strong balance sheet and significant cash flow generation provides us opportunity to pursue all three capital allocation priorities. In addition to our share repurchase program, we use corporate cash to make required tax payments associated with the vesting of employee RSUs and withhold the corresponding number of shares from employees. Since the inception of our share repurchases in Q3 2022, our fully diluted share count has decreased approximately 9%, driven in part by our share repurchases and cash used for the employee tax obligation totaling 13.6 billion. That's a lot of info. You don't get that much info usually. There's a lot there. That was solid. That was solid. Now we just gotta wait for the earnings call, I guess. Yeah, we just wait. Hey, thank you, Ruben. Appreciate you, bro. Appreciate you, Ruben. Any GME whales? Yeah, there was a few. I covered them at the start of the stream. There's a few. A lot of sales. A lot of sells, though. A lot of sells. Who's selling at these prices? A lot of people. A lot of people. It's a risky stock. Volatile. And also, you know, they could be down on their position, so they could also be selling it for tax write-offs. There's a lot of reasons why they could be selling. There's a lot of reasons people sell, but they only buy for one reason, right? A lot of the whale data coming in would be from last year anyway. Usually takes a while for them to report. Airbnb sounding pretty good. Oh yeah, it's solid. It's just probably overvalued. Most likely. Solid business. But most likely overvalued. Like most things. Especially Airbnb's a newer IPO. I didn't see what their total assets were. just the only thing I could assume. Oh, nice. They even have their 10K out. Damn, Airbnb's solid, bro. Yeah, 22 billion. A lot of their liabilities are money from customers. They paid off all their debt. That's solid. So it looks good. Just potentially, the stock's potentially overvalued. That's the only issue. You know, potentially. It could not be. Alrighty then. Still got a little bit till the call starts. Is there a bunch of people streaming this? Is that why nobody's coming in? So whack. So whack. Maybe Airbnb is just not that popular. Doesn't really look like anyone's streaming it. Why do you think it's overvalued? The stock hasn't moved in 5 years. That's my point. Airbnb's a solid business. If the stock wasn't overvalued, it should be going up. So the only reason it's probably not going up is because it's overvalued. You're sitting at a 71 billion market cap with, I mean, with liabilities less than 20 billion in assets. Seems overvalued. Coming back to fair value. What's fair value? Do you know what fair value is? Because it's probably really low. And book value is really low. Yeah, exactly. You don't know what fair value is of this stock, so don't act like you know what you're talking about. I don't know why people come in my stream and ask questions and then they sit and act like they know everything. Like if you don't know what you're talking about, I don't know why you're saying anything. That's crazy. That's crazy. What does free cash flow yielding 6% have to do with anything? Yeah, I literally just read it. Doesn't matter. It's a small business sitting at a 70 billion market cap. It's probably overvalued. Yep, I know how business works, my friend. But you still haven't told me what fair value is. You're not giving any reasons why the things you're saying matter. So, are you just saying things? Like, don't go into people's streams and ask questions, and then they tell you why they think what they think, and then you sit and try to explain literally nothing. Like, if you don't know what you're talking about, that's fine. You know, it's fine to ask questions, but don't ask a question and then sit and act like you know what you're talking about. Like, why'd you even ask the question if you already know everything? Makes literally no sense. If you already know everything, why did you ask the question? Sounds like a girlfriend we all dumped at some point. Damn, double prizes. Damn. What's up, double prizes? How you doing, bro? How you doing, double prizes? The price of a business is based on the amount of money it can give a shareholder via buybacks and dividends. You sure about that? Are you sure about that? Because it would take almost 30, well, with their current cash flow, or probably over 30 years to bring in 70 billion of value. So are you sure about that? You think Airbnb's pricing in 30 years into the future? I really doubt it. Buying your own stock is your way of getting your shareholders a return. That's an issue. Yeah, facts. Especially when you're diluting at the same time. Basically makes no sense. The only reason they're doing buybacks is because they have so much stock-based compensation. If they didn't have as much stock-based compensation as they did, they wouldn't be doing buybacks at all, probably. But again, I don't know why you came in here and asked a question if you already know everything. Doesn't really make sense. Doesn't really make sense. Crazy stuff, crazy stuff. Crazy stuff. Wonder what it's like to know everything about stocks. How do you determine fair value? Well, there are mathematical equations to equate to to find fair value. There's mathematical equations for book value. There's a lot of ways to figure out the true value of a stock. Am I going to do them right now? No, I'm not. I don't want to. I don't care. If you already know everything, how do you not know that there's mathematical equations for fundamentals? Like, what? That's crazy. That's actually insane. There's literally mathematical equations for all of this. Mathematical equations to equate the equation. God damn it, double prizes. This fucking guy, dude. Who invited this guy, bro? He's always just fucking... He thinks like I'm a stripper or something. He's just throwing bills at me all the time, bro. He's like, take it off! Take it off! I'm not going to. I'm not your whore, double prizes. I'm not your whore. I appreciate you, bro. Thank you. Thank you, double prizes. God bless you, bro. God bless you. My guy, double prizes. All I know is that we know nothing. That's, man. No truer words have ever been said. No truer words have ever been said. All I know is that we know nothing. Amen, amen. I hold up GME's balance sheet to other balance sheets. I use it as the gold standard. That's funny. No one wants to see that. Damn, alright. Damn. I was hoping you wanted to see it, bro. I was hoping. I was gonna make you sub to my OF, bro. I'm gonna give you a private link to my OF. Much love, double prizes. I appreciate you, bro. I appreciate you, bro. Thank you. If you get high, the stick goes high. Or the stock goes high. Yeah, dude. The higher you get, the higher the stock goes. You didn't know? He's paying you to layer up. He's paying you to layer up. Like, oh, this guy's disgusting. Cover that face. Buy a mask. That shit's funny. That's some funny stuff right there, guy. All right, let me get the earnings call ready. Hey, much love, double prizes. Appreciate you stopping in, bro. God bless. Thank you for all the donos, bro. You're too nice, bro. You're too nice. I don't deserve all the donos you've been given, but I do appreciate them. Much love, bro. Much love. Are we going higher on GME? I don't know. I don't know. Is it going up or something? Still nothing on the lightning packs, though. What was up with that OSRS tweet? Did anyone message me? No. Don't delete the message. Oh, he does it. He's a deleter. He's like me. He doesn't like having messages out there. Oh, no, GameStop's not going up. It's not going up. Oh no. I'm losing. No. No. I'm losing. Okay. I don't really care, actually. In case you were wondering, I don't really care. Enjoy your Batcave lair, I assume you live in. That's funny. Alrighty then. Wonder if people are gonna come in for the call. If nobody comes in for the call, I'm gonna switch gears and watch State of Play. Maybe I'll just watch State of Play on my phone. I don't know. We'll see. We'll see. We'll see. What day is it? It's Thursday? What the heck? What the heck, dude? This feels like a Monday for some reason. I don't know why. It's been a long week. Yeah, I wonder what happened to the lightning packs. They're supposed to be out. I wonder what happened. Searched and I couldn't find anything. They have the thing on Reddit. And I'm pretty sure it came from Gamestop's Instagram or something. We played it yesterday. Where'd it go? Yeah, it's right here. It's just this ad. And then at the end, it said power pack. It just said power packs drops 212. I wonder if power packs is out of beta. Maybe that's what it is. Maybe it's out of beta. But it says they removed it after posting it, so maybe they didn't mean to post it. I don't know. I don't know. But then I thought someone yesterday said it was still there. So I'm not sure, man. That's kind of the issue of me not having Twitter. I can't verify anything. But I can't do Twitter anymore, bro. I just can't. There, there's things that I want to view on Twitter and it's useful. But the other 99.9%, I just can't deal with it, bro. There's so much toxicity on there. It's just not even worth it. It's just not even worth it. The toxicity of our city. Maybe an announcement's coming, maybe. You'd think you'd got it by now, though. You'd think you'd get it by now. Disorder! Disorder! The stream lagged. That was weird. The stream lagged. Oh, I better get the sound on, huh? Don't make that mistake. Don't make that mistake again. Earnings call should be starting here in a few minutes. I'll lose hope after 7:41 p.m. Until then, Lightning Pack news is imminent. 7:41 p.m., huh? Interesting, interesting. What time zone, though? What time zone? Because I think 7:41 p.m. your time is, like 5:41 p.m. my time. It's 7:41 p.m. somewhere. Well, it was 3 minutes ago. Somewhere it's 7:41 p.m. Gotta be Eastern. Yeah, that's usually what they go off of. Not gonna lie, I never understood the 7:41 meme. I think it's just I don't really know too much about it either, but it's just a number that's been thrown around since the early days. It's like 6-7, you know? It's kind of like 6-7. It's 6-7 before 6-7 was ever a thing. It's like it means nothing, but you just see it a lot. It's just common numbers. Like if you go read the interviews Ryan Cohen did, if you read the whole thing without any pauses, you'll read it in 7 minutes and 14 seconds, both of them. You know, they bought 400 or 4,710 Bitcoin. I can't think of many things off the top of my head, but it's just a common number in the tinfoil world. In the tinfoil world. Maybe that's the price the stock's gonna go to, who knows? 741's like Fight Club, you can't talk about it. You gotta defend the bear thesis at the 741 club. Gotta defend the bear thesis. There really nobody's gonna come in for this earnings call? That's lame. I think yesterday people didn't come in until literally when the call started. But who knows, maybe nobody cares about Airbnb. Especially because it hasn't moved in forever. like I said, the only reason I'm covering this one over Coinbase is because I'm actually interested in this business. Coinbase isn't interesting. All they're gonna do is talk about prediction markets. Like, it's pretty whack. I've heard Airbnb is why the housing market sucks. Definitely not. It's because interest rates went up a fuck ton. That's why the housing market sucks. But what's your definition of sucks? Because right now probably is the best time you've ever had in the past 5 years to buy a house. Is it overpriced and underpriced is an opinion, a really large opinion. But if you have money right now, it's the best time to buy a house. If you're trying to get a mortgage, I could see why you think the housing market sucks. But anyone who actually has money, man, it's a good time to buy some real estate. Home prices went up 150%, wages only went up 50% in the last decade. That might be the real issue. Yeah, probably. But either way, if you could go to a state where it's not, where the houses are cheaper. You could buy, there's a lot of factors to that. There's a lot of factors to that. Bunch of people were going after passive income by buying up houses and turning them into Airbnbs. I mean, a lot of people are doing that. A lot of people rent out houses too. A majority of people were renting out houses before Airbnb was ever a thing. So to attribute it to one thing, I don't know.
Good afternoon, and thank you for joining Airbnb's conference call for the fourth quarter of 2025. As a reminder, this conference call is being recorded and will be available for replay from the investor relations section of Airbnb's website following this call. I will now hand the call over to Andrew Slavin, Vice President of Investor Relations. Please go ahead.
Good afternoon, and welcome to Airbnb's fourth quarter of 2025 earnings call. Thank you for joining us today. On the call, we have Airbnb's co-founder and CEO, Brian Chesky, and our Chief Financial Officer, Ellie Mertz. Earlier today, we issued a shareholder letter with our financial results and commentary for our fourth quarter of 2025. These items were also posted on the investor relations section of Airbnb's website. During the call, we'll provide some brief opening remarks and then spend the remainder of time on Q&A. Before I turn it over to Brian, I'd like to remind everyone that we'll be making forward-looking statements on this call that involve a number of risks and uncertainties. Actual results may differ materially from those expressed or implied in the forward-looking statements due to a variety of factors. These factors are described under forward-looking statements in our shareholder letter and in our most recent filings with the Securities and Exchange Commission. We urge you to consider these factors and remind you that we undertake no obligation to update the information contained on this call to reflect subsequent events or circumstances. You should be aware that these statements should be considered estimates only and are not a guarantee of future performance. Also, during this call, we will discuss some non-GAAP financial measures. We provided reconciliations to the most directly comparable GAAP financial measures in the shareholder letter posted to our investor relations website. These non-GAAP measures are not intended to be a substitute for our GAAP results. And with that, I'm pleased to turn the call over to Brian.
All right, thank you, Andrew, and good afternoon, everyone. Thanks for joining. I'm going to start with a quick recap of our Q4 results, and then I'm going to spend a little more time on what's driving them, because that's really where the story is. Now, in Q4, we delivered strong results across the board. Revenue grew 12% year over year to $2.8 billion, exceeding the high end of our guidance. Gross booking value grew 16% year over year to $20.4 billion. This was our highest growth quarter in more than 2 years. Nights and seats booked grew 10%, our strongest quarter of the year. But what matters most is the momentum that we're gaining. In a marketplace, re-accelerating growth isn't as simple as stepping on the gas pedal. It's more like turning a cruise ship. It takes time and discipline, and you don't always see it from one quarter to the next. The acceleration that you're seeing didn't happen by accident. It's a result of a deliberate path that we've been on for the past few years. So let me walk you through it. Airbnb grew incredibly quickly in the years leading up to our IPO, faster than we've ever imagined. We were like a company built to be a two-story house. But when we went public, we wanted to keep building. But you can't add 10 floors to a house that wasn't designed for it. You need a stronger foundation. So we rebuilt our tech platform. We rebuilt the app tab by tab. And over the last few years, we improved nearly every part of the guest and host experience. But rebuilding the foundation wasn't enough. We also need to innovate faster. Now, when I look back at what drove Airbnb's early success, it wasn't just the idea. It was how we worked. In the early days, Joe, Nate, and I would sit in our apartment and obsess over every detail. We'd ship something, learn quickly, and double down on what worked. That cycle, focus, ship, learn, scale, is what compounded our initial growth. As companies grow, they often lose that speed and focus. So 2 years ago, we made a deliberate decision. We were going to recreate the same innovation formula inside Airbnb, but at a global scale. We called it Project Y. We created a small elite team and gave them a really clear mandate. Make it easier to find and book a home on Airbnb. We start with the little things that make booking harder than it needed to be. Simple improvements like better search filters and small tweaks to the booking flow. When those changes worked, we went bigger. We improved how we convert high-intent visitors into long-term users using simple web prompts to drive more app downloads. We made search more flexible, helping guests discover homes they wouldn't have seen before. That drove an even greater impact. Eventually, we tackled bigger opportunities, like completely redesigning the checkout flow to make booking simpler and more intuitive. Now, these are just a few of the hundreds of improvements the team shipped, driving hundreds of millions of dollars in revenue in 2025 alone. And we believe Project Y will deliver hundreds of millions more this year. Now, once we saw this blueprint work, we began applying it across the company. And what I want to do is highlight 4 areas where the Y innovation model is driving growth. The first is pricing. Hidden fees are one of the biggest friction points in travel. So we created a pricing team with a clear goal: make pricing simple and more transparent. The first major step was showing the total price up front to guests. In the US, we're the first major travel platform to do this. But price transparency was just the beginning. We launched dozens more updates, from more flexible cancellation policies to better pricing tools for hosts. These changes stacked. Then we made the biggest move of all: reserve now, pay later. For the first time, guests in the US could book eligible stays paying $0 upfront. The response was immediate, driving booking acceleration in Q4, especially for larger, high-priced homes. We're now expanding this to new markets, and it's a key part of the strength we're seeing in Q1. Now, we believe that pricing initiatives will drive as much revenue this year as Y, and will remain a strong tailwind for years to come. Next up, supply. Most of our supply growth is organic, with hosts coming directly to us. But we've also built a supply engine that lets us be surgical about where we grow. And the best example is how we lean into large events. For example, in Paris, we added over 40,000 listings for the 2024 Summer Olympics. Now, we're repeating that same playbook for the biggest event on Earth, the 2026 FIFA World Cup, across 16 cities in North America. At the same time, we're also improving quality. We've removed over 500,000 low-quality listings, while guest favorites, the very best listings in Airbnb, grew 30% in 2025 compared to 2024. And in Q4, guest favorites made up nearly half of all bookings on Airbnb. We also apply the Y model international growth. Airbnb operates in nearly every country in the world, but roughly 70% of our revenue comes from just 5 countries. Now, that's a massive opportunity, and we're unlocking it by going deep in a small number of priority countries. And Brazil is a great example. A few years ago, Brazil was a smaller market for us, so we put a focused team on it. We introduced features that we know matter to the Brazilian market, like interest-free payments and local payment methods, and we leaned into cultural moments like Carnival. We also invested in local campaigns to build relevance. The results have been incredible. Brazil moved from a top 10 market to a top 5 market on Airbnb. In Q4, it was our second largest contributor to first-time bookers, behind only the US. This shows what happens when you pair global scale with local execution. And we're applying the same playbook to our highest priority countries in every region. Finally, we're applying the Hawaii model to new businesses. We launched services and experiences globally in May, but to better scale them, we're taking a city-by-city approach. We're going deep in one place, reaching product market fit, and expanding from there. We started with Paris for experiences and LA for services, and we're really seeing great results. We're also starting to test new services like grocery delivery and airport pickups to make each trip better from the very beginning. And to capture even more trips, we're bringing boutique and independent hotels onto the platform so that no matter what kind of stay a guest wants, they can always find it on Airbnb. Now, it's still early, but the opportunity with hotels is massive, and we plan to share more about our approach later this year. But the big idea here isn't just building a bunch of standalone businesses. These are all part of a much larger vision, the Airbnb trip. We are one app and one brand, where every part of the trip makes the other parts stronger. There are multiple entry points into Airbnb and multiple ways to drive more bookings. A guest might book a service or experience, then discover a home for the trip. Or they might book a hotel for a business trip, then come back to Airbnb to book a home for a family vacation. Each part of the trip reinforces the others. The final piece that accelerates everything we do is AI. Now, we've taken a really intentional path here. While other companies rush to bolt chatbots into the existing apps, we started by solving the hardest problem, customer support. We built a custom AI agent trained on millions of our support interactions. It's already resolving a third of our support issues without needing a live specialist, and resolution times are significantly faster. It's live across North America, and we're planning to roll it out globally. But that's just the beginning, because we're building an AI-native experience where the app doesn't just search for you. It knows you. It will help guests plan their entire trip, help hosts better run their businesses, and help the company operate more efficiently at scale. That's a big reason we brought in Ahmed Al-Dale as our CTO. Ahmed is one of the world's leading AI experts. He spent 16 years at Apple and most recently led the generative AI team at Meta that built the Llama models. He's an expert at pairing massive technical scale with world-class design, which is exactly how we're going to transform the Airbnb experience. This approach is also our strongest defense against disintermediation. A chatbot can give you a list of homes, but it can't give you the unique ones you find on Airbnb. A chatbot doesn't have our 200 million verified identities or our 500 million proprietary reviews. And it can't message the host, which 90% of our guests do. It can't provide global payment processing, customer support, or insurance. By layering AI over the entire Airbnb experience, we believe we're building something that's impossible to replicate. So you can see why we're so excited about the year ahead. And our guidance reflects that. We expect revenue growth to accelerate to at least low double digits in 2026. We expect adjusted EBITDA margins to be stable year over year. And we'll do all of this without investing billions or tens of billions of dollars. We don't need massive capital investment to grow. We don't own homes. We don't operate experiences. And we're not building data centers. What we're doing is finding small wins and scaling them profitably. That's why I've been able to generate free cash flow at nearly 40% of revenue and nearly $19 billion of cumulative free cash flow since our IPO. It gives us the ability to reinvest back in our business while strengthening our balance sheet and maintaining healthy margins. Now, as you look ahead to 2026, we can't predict every quarter with precision. Travel is influenced by everything from currency to macroeconomic conditions to global events. But what we can control is the speed of our innovation. In the long run, that's what leads to more growth. So, in summary, we rebuilt major parts of the company. We adopted a new blueprint for innovation. And now we're seeing increased momentum. That doesn't happen by accident. It's a result of an incredible team rowing in the same direction at global scale. So to everyone on the Airbnb team who's listening, thank you. The business is stronger because of you. With that, I'll turn it over to Ellie to walk through the financials in more detail.
Thanks, Brian, and good afternoon, everyone. As Brian just shared, we're seeing increased momentum in our business. I'll start with Q4 financial results, and then I'll cover our outlook for Q1 and the full year 2026. Q4 was a great quarter for Airbnb. Gross booking value grew 16% year over year to $20.4 billion, driven by strong growth in both bookings and price. Nights and seats booked increased 10% year over year, an acceleration from Q3, with strength seen across all regions. By region, Latin America grew in the high teens, Asia Pacific grew in the mid-teens, EMEA accelerated in the high single digits, and North America grew in the mid-single digits. Now, going into the quarter, we expected a tough comp given a particularly strong Q4 in 2024. And as the quarter played out, we saw a slightly better macroeconomic environment than anticipated. But more importantly, our product roadmap delivered material lift to the business. As Brian shared, we've been steadily making it easier to find and book a home on Airbnb. In Q4, a few updates in particular helped drive our acceleration. The launch of Reserve Now, Pay Later, updates to our cancellation policies, and the beginning of our migration to a simplified fee structure. Reserve Now, Pay Later saw significant adoption among eligible guests in Q4. It's also led to longer booking lead times and a mix shift towards larger entire homes, especially those with 4 or more bedrooms, contributing to the increase in ADR. And as Brian mentioned, given the positive results, we've decided to roll it out to more guests globally and to cross-border stays in the U.S. Our updated cancellation policies and simplified fees also contributed to both nights and GBV growth in the quarter. As a reminder, beginning in October, we started simplifying our fee structure, which we believe will help our hosts price more competitively. We began migrating our API hosts to a single service fee and now plan to migrate more hosts in 2026. Hosts on a single service fee can adjust their prices to maintain the same net earnings while guests continue to see the full price upside. In total, we estimate these 3 features delivered over 200 basis points of growth in nights booked and roughly 300 basis points of growth in GBV in Q4. In 2026, we'll continue iterating to simplify pricing, improve transparency, and help our hosts stay competitive. Now turning to our Q4 financials. Revenue was $2.8 billion, up 12% year over year, and exceeded our guidance, driven by the impact of our product update. In terms of profitability, we generated $786 million of adjusted EBITDA, representing a 28% adjusted EBITDA margin, also exceeding guidance. Finally, net income was $341 million and was negatively impacted by roughly $90 million of one-time non-income tax. For 2025, our full-year effective tax rate was 20%, including one-time discrete items that increased our provision for income taxes in Q3. Now, starting in 2026, we expect the One Big Beautiful Bill Act to materially reduce our effective tax rate to the mid to high teens, primarily due to how foreign earnings are taxed, which will benefit our consolidated earnings. Next, to our balance sheet and cash flow. We continue to generate significant cash in Q4, delivering $520 million of free cash flow. In 2025, we generated $4.6 billion, representing a free cash flow margin of 38%. At the end of Q4, we had $11 billion of corporate cash and investments, as well as $7 billion of funds held on behalf of our guests. Our strong balance sheet allowed us to repurchase $1.1 billion of our common stock in Q4, up from $857 million in Q3. And in 2025, we repurchased $3.8 billion of our common stock, using over 80% of our free cash flow. Returning capital to shareholders remains a key component of our capital allocation strategy. Since introducing our share repurchase program in 2022, we've reduced our fully diluted share count by about 9%. Now let's shift to our Q1 and full year 2026 outlook. We're encouraged by the momentum we've seen so far this year and excited about our roadmap to drive growth in 2026. In Q1, we expect to generate revenue of $2.59 to $2.63 billion, representing year-over-year growth of 14 to 16%. This includes an approximate 3-point FX tailwind after factoring in our hedging program. We expect gross booking value to increase in the low teens year-over-year, driven by high single-digit growth in nights and seats booked, and a moderate increase in ADR due to price appreciation and FX. On profitability, we expect Q1 adjusted EBITDA margin to be approximately flat year-over-year. And for the full year 2026, we expect year-over-year revenue growth to accelerate to low double digits, with an ambition to grow even faster than that. While FX tailwinds should fade as the year progresses, we're encouraged by healthy demand and execution across our growth initiatives. We're also excited about major events this year, including the Winter Olympics happening now in Milan and the FIFA World Cup coming this summer. Cities continue to look to Airbnb to help meet demand around large events, and our global supply positions us well to support that demand. Overall, we believe continued progress against our product optimizations, pilots, and new offerings, together with broader macro conditions, will support incremental growth in 2026. And finally, across the full P&L, we're continuing to drive efficiencies in our platform. We plan to reinvest most of these efficiencies into marketing, product, and technology to support our growth. As a result, we expect our 2026 adjusted EBITDA margin to be stable year-over-year. As a close, 2025 was an exciting year, and I'm incredibly proud of what the team delivered. We're carrying that momentum into 2026 with an ambitious set of goals. We'll continue strengthening our core business while accelerating innovation to drive growth. And with that, I will open it up to Q&A.
Thank you. We will now begin the question and answer session. If you'd like to ask a question, please press star one on your telephone keypad. If you'd like to withdraw your question, simply press star one again. Your first question comes from the line of Richard Clarke from Bernstein. Your line is open.
Hi, good afternoon. I guess AI is the topic du jour, and you gave some helpful remarks about why the AI bots today can't match what Airbnb do. But given the sort of speed of innovations going on, why do you think those AI platforms couldn't launch a short-term rental platform over time? And maybe secondly, do you see any risk that you'll have to share your economics with a AI platform at some point going forward, or do you expect you'll be able to retain the same level of direct traffic you have today in an AI world? Thanks.
Yeah, I mean, it's a great question. Let me start by saying this. The vast majority of what is Airbnb is not the app that you see. First of all, we have a whole host app, which is really critical. We built this over 18 years. We handle more than $100 billion in payments through the platform. Customer service is one of the most difficult problems in Airbnb. You know, we don't have SKUs. We need to adjudicate between people speaking different languages. We provide insurance and protection for everyone. You know, we do a lot of verifications. 90% of people who book on Airbnb send a message. You can't send a message without verified ID. We have 200 million verified IDs, which is more than US passports in circulation. The vast majority of our homes in our unique inventory is only on Airbnb. We're adding more offerings over time, and we think people are going to want to put them together into an itinerary that they could bring on in their phone with them when they're traveling. I think these chatbot platforms are going to be very similar to search. They're going to be really good top-of-funnel discoveries. And in fact, what we've seen is I think they're going to be positive for Airbnb. And I'm very, very deep in this space. And what we see is that traffic that comes from chatbots converts at a higher rate than traffic that comes from Google. But the other thing to know, and this is the most important point, is that these models are not proprietary. The models on ChatGPT, the models in Gemini, the models in Claude, and the models like Kiwi are available to every single company. And so pretty soon, every company becomes an AI platform if they make the shift. We will be able to build everything everyone else will have if we use their models. And we believe specialization will win in travel, because if somebody wants to find an Airbnb or have a trip, we can take their model, the same model they use, and we can post-train it and tune it based on our millions of interactions. We can connect it to our customer support agent. We can connect it to our host. And that's fundamentally what we think. It's why we've hired Ahmed Al-Dali, one of the foremost leading experts in AI. Ahmed Al-Dali, in fact, built one of the models. He built the Llama model. And we want to build a team to make our company much more of an AI native company. So I think that for chatbots or AI companies to win, we don't need to live in a world where everyone else has to lose. I don't think that one company is going to own everything. I think we're going to be able to work together. And these companies will be very helpful top of funnel traffic generators for Airbnb, just like Google was.
Your next question comes from a line of John Colantuoni from Jefferies. Your line is open.
Okay, great. Thanks for taking my questions. I wanted to ask one on Asia region. Nights growth was still strong at the mid-teens, but did moderate from recent quarters. I know it's your smallest region, but I was hoping you could talk to what drove the slowdown and how you think about the growth opportunity in Asia Pacific over time. And second, I was curious on the services and experiences. Have you seen any signs that they're helping you acquire new customers that you can convert to accommodations, given that over half of your experiences weren't attached to an accommodation bookings? Thanks.
Let me start with the Asia question. So when we look at our performance on APAC from a destination perspective, overall growth has been, I would say, relatively stable over the course of 2025. That being said, we see a tremendous amount of opportunity in terms of future growth for the region. What I would say in terms of APAC is that obviously there's different pockets in terms of where we have seen substantial growth. As you're probably aware, we have relatively high levels of penetration in Australia, which factor into that number, whereas we're relatively nascent in some of the, I would say, continental countries, in particular places like India, Southeast Asia, Korea, etc. What we shared in the letter is that we're seeing nice performance in those markets that we have begun focusing on. So in particular, what I would call out is domestic Japan. That's a market and segment that we began our expansion playbook back in Q4 of 24 and have seen some nice results. Second, I would call out India, which we mentioned in the letter. Huge market where we are seeing really substantial growth. So 50% growth in the last quarter, very strong, and we see opportunities to accelerate that growth in 26. So the broad story on APAC is it is stable. We are seeing some very positive signs in particular markets that we're leaning into, and it's the focus of our international markets expansion strategy going forward. Second question. Yes, I mean, what we've called out in terms of the dynamics of where we are finding experience booking, the call out in the letter that we provided is about 50% of our experience bookings today come from guests that are unattached to a home booking, meaning they are not already staying with us in a home and therefore attached to the trip an incremental experience. They may be staying in a hotel in that market. They may be not traveling at all. And what I would say there is it's a very exciting opportunity for us in a couple of forms. One is it provides a new segment of guests that we can, in the future, convert to home guests. It also gives us signs that with these new products and offerings, we have the opportunity to have a higher frequency guest usage beyond just a big trip. So, for example, something that we see in Paris is that there's been really nice uptick in terms of, in particular, our Airbnb original experiences by local Parisians, which tells us that that category of inventory, albeit highly differentiated, is a great opportunity for us to attract local crowds to our app.
Yeah, I think one of the things that I called out in my opening remarks is we're seeing a lot of momentum about getting new offerings off the ground and piloted. And our basic idea is, it's not dissimilar from Amazon in the late 90s where they started the book retailer. The unifying idea of Amazon, though, probably was the cardboard box. In other words, everything that you could send in a cardboard box. And so you could send all these different things, and they added one category after the other. I think the unifying idea for Airbnb is the trip. And we take a very, by the way, broad definition of the trip, including 30-day stays and even longer. But there are so many different components that we can offer. And the basic idea is we want every new offering to be strong enough to stand alone, but better together. And so hotel is a great example. There are some people that only stay in Airbnb. There's some people that only stay in hotels. Most people are willing to stay in both. And some trips are better in Airbnb, and then some trips, if you need a last-minute stay, you're traveling for business, you're doing one night, it's really good for hotels. So we think that all these components can make the overall offering better. There's a lot of synergies.
Your next question comes from a line of Lee Horowitz from Deutsche Bank. Your line is open.
Great. Thanks so much. I guess, can you give us a sense of how Reserve Now, Pay Later cancellations have been pacing relative to your expectations, perhaps particularly in the face of weather disruptions in the 1Q, and then how you're thinking about baking in cancellation expectations to your full-year adjusted EBITDA guide? And then secondly, in the past, you've talked about how AI search will preclude your deployment of sponsored ads. Can you maybe just unpack that a bit more and explain how AI search particularly may help you bring sponsored ads to market a bit more quickly? Thanks so much.
Okay, so first on the question of Reserve Now, Pay Later, and the impact of cancellations. If we just back up for a moment, before we launched Reserve Now, Pay Later in the U.S. Back in the summer of 2025, we extensively tested the product to ensure that by the time the cohorts opting into the product had reached their check-in date, that it was net beneficial to the business, meaning that the gross lift in bookings was larger than the net increase in cancellations before check-in. We're doing that level of testing for each incremental segment. We are considering expanding Reserve Now, Pay Later out to ensure that the net benefit is obviously positive for the business. What I should say is that in the segments that we have launched this offering, the cancellation curves have been very close to what we saw from a tested perspective, and so we feel frankly quite good about the progress and the performance of that offering. In terms of its impact over the full year, obviously there is a bit of a pull forward in terms of when people make their booking, but we are already absorbing the elevated level of cancellations from that product. I think one piece of perspective is that in terms of the aggregate nominal increase in cancellations rate, it's approximately 1%. So, an average of maybe 16% cancellation rate historically going to 17. It's obviously higher within the cohort that chooses that product, but is not hugely material relative to the broader cancellations on the platform. Final thing I would just note on Reserve Now, Pay Later, as we've called out, it has lengthened lead times, which we think is good from a competitive perspective. And second, it has a modestly positive impact in terms of increasing ADR as consumers who don't need to, extend a huge purchase on their credit card are more likely to choose a slightly nicer listing.
Yeah, and then on the AI search and how it impacts sponsor listings, I've been asked, quite a few earnings calls about sponsor listings, and one of the things that being really clear after the launch of ChatGPT was that traditional search was going to become essentially conversational AI search, and that what we wanted to do is really design AI search, really see how that works, and then if we are going to do sponsor listings, we design that ad unit in that form factor. So we're focused first and foremost on the most perishable opportunity, which is AI search. Actually, funny enough, we are doing tests as we speak. So AI search is live to a very small percent of traffic right now. We're doing a lot of experimentation. The way we do things with AI is much more rapid iteration, not big launches. And over time, we're going to be experimenting with making AI search more conversational, integrating it into more of the trip, and eventually we will be looking at sponsor listings as a result of that. But we want to first nail AI search.
Your next question comes from the line of Brian Nowak from Morgan Stanley. Your line is open.
Great. Thanks for taking my questions. Brian, maybe to go back to that last question on AI search, let me just ask you sort of another bigger picture one. As you sort of sit here in early 2026, if we're sitting here a year from now, what are the areas you're most focused on for seeing improvements to the platform using AI this year? That's one. And then two, maybe one just on the P&L impact. Any help at all on how you're thinking about the impact on gross margins from increased AI investment this year versus last year? Thanks.
Yeah, I can answer both of them. And I'll start with the second one. I think one of the great things about Airbnb is that we have a very, very cost-efficient innovation model. So unlike other companies, we're not building models. We do not have a huge CapEx cost base. So our investment in AI will not affect the P&L. I don't think you'll see it in the P&L. That's number one. Number two, it's a year from now. If we're successful AI, what do we see? I think 3 or 4 things. Number one, let's start with customer service. Right now, nearly 30% of tickets in North America that are English-based are handled by an AI agent. A year from now, if we're successful, significantly more than 30% of tickets will be handled by a customer service agent in many more languages, in all the languages where we have live agents, and AI customer service will not only be chat, it will be voice. So you can actually call and talk to an AI agent. We think this is going to be massive because not only does this reduce the cost base of Airbnb's customer service, but the kind of quality of service is going to be a huge step change. Not only can you get responses in seconds, but the agents using AI are going to be significantly more productive. That's number one. Number two, it's going to make our engineers and everyone at Airbnb significantly more efficient. More than 80% of engineers are now using AI tools. That soon will be 100%. But of course, that metric is a bit of a vanity metric. The real question is, what's the culture of the company? Are you a startup? Are you highly adaptable to the changing currents of AI? And I think Airbnb, certainly within our space, is the most adaptable. We are designed to adapt, to not move like a cruise ship, but to move very nimbly. So that's partly why we hired Ahmed Al-Dali. We wanted to be on the frontier of AI, at least for the non-native AI companies. And I think you're going to see a lot more productivity and a lot more innovation velocity. The third is you're going to start to see AI through the booking experience and the listing experience. AI search will eventually, I can't put a timeline on it because AI is obviously highly unpredictable, but we would love to be the first, company in e-commerce that really nails AI search, conversational search. I think it's really hard, not just in travel, but all e-commerce. One of the reasons that chatbots are really hard for commerce is because they're very visual. They're photo forward. You need to be able to compare. You need to be able to open different tabs. So a text forward chatbot interface is not the ideal. So we have to actually innovate on the user interface. We're also using AI across the board, like being able to list your space much more easily. So if we are successful 1 year from now, in summary, AI customer service will be voice and chat across all languages. It will penetrate many more ticket types. It will massively accelerate our innovation. It will be as AI native as any other company in our space or more. And then finally, the experience for guests and hosts will be materially better.
Your next question comes from a line of Doug Anmuth from JP Morgan. Your line is open.
This is Dale for Doug. Thanks for taking my questions. I have two. First one, looking at the 2026 revenue acceleration guide, could you help us think through the acceleration drivers across the core markets, expansion markets, services, and perhaps?
What the hell? Their broadcast just stopped randomly. Never seen that happen before. That's new. Never seen that before. I don't think that's ever happened. That was very weird. Very weird. I legit don't think that's ever. I mean, I've been doing earnings calls for a long time, and I don't think that's ever happened. I have never seen a broadcast end randomly like that. That's new. That's new. Apparently they didn't like that question. They must have not liked that question. There's something. I don't know. That was weird. That was way weird. Well, that's whack. That's pretty whack. I guess, I don't know. I don't know. That was weird. State of play. We've already missed like half of it though. Oh, what is that? Is that a new Metal Gear? Oh, it's Metal Gear Solid 5 remastered probably.
You'll have no choice but to accept death.
This is my final
music. Music. Yeah, I think that's just Metal Gear Solid 5 remake. Yeah, I'll watch this later. I'll watch that later. Well, I guess I don't know. I guess I don't know. Let me see if they sent like a new link or something. Well, I've never seen that before, man. Never seen an earnings call just stop. That's never happened. Well, whatever. I guess, I don't know. I guess I'm out of here. I don't really know what to say about that. There's nobody in chat, so. As far as the Airbnb thing, if you guys are still here, they rent hotels on Airbnb as well. Pretty sure. But I guess I'm leaving. I guess I don't know what's going on. Nobody's even here, so. All right. Have a good one, I guess. Bye.